Shrink this down. Let's go here and let's do this. Okay. All right. Yeah. Hmm. Let's tariff detail here. We can discuss this crazy market. All right. So, all right. So, make sure we're good over here. We should be good there for now. All right. Let's see. Get over to YouTube. See what's going on over here. All right. All right. We good. We good money. Get over to YouTube. Cut the volume down. All right. Them brothers popping over there. Let's go here. Okay. Okay. Yeah, we should be good. All right. Let me just let that run for a while while I get myself together here. Like, All right. It's been a long process there. All right, guys. Peace, power, and profit. Peace, power, and profit. I am finally getting this thing together. My computer was acting very funky and would not let me adjust my images as I wanted to get this live started. But nonetheless, I am here and looking to discuss this day as we know to be Liberation Day. And I will definitely edit this once it goes up to take out all that indiscretion, pause, and tinkering with the edit features earlier in the live once I started. So that will not be on the repost, if you will. All right. With that said, guys, I just want to come on and speak to what we know to be the day of reckoning, right? We had a somewhat impromptu discussion about this last week, as we, somewhat was speaking about a video that Oba Chris put out concerning, uh, the value of, kind of assessing different assets and asset classes, right? The ideal of, what are the more liquid markets right now? What are the more valuable orientated markets right now? And how should you position yourself, or how should you diversify in terms of being able to invest in these different markets? All right, what's going on, Oba Dollar Wheel in the building? I see you in the building, Oba. Let me put that link out there too, guys. I'm all over the place trying to get this thing set up, and I was glitching big time on my end trying to set up my thumbnail and stuff. So I got it together now. So nonetheless, it's impromptu, but we're going to discuss what I know to be, um, nothing that we have not already discussed, nothing that we haven't already went and peel back the layers of this onion in terms of tariffs. This is just a circa 2018, 2019 playbook by President Trump. So it's nothing new, right? So we're going to discuss it. For those who want to discuss it, you're free to come on the live. You're free to follow along on YouTube. Free to follow along, i.e. Twitter, X, Instagram, wherever. But nonetheless, you will have privy to, well, you'll be privy to watch the playback as well once it does go up later on. If you are in the throes of, living life, right? Cooking dinners and getting ready for the next day, whatever the case. I just wanted to come on and submit my 2 cents into the discussion, right? The topic of the day is tariffs, by way of Liberation Day, right? So it's weird because I'm pretty sure this is going to be a history book moment for a lot of reasons and ways where we somewhat already forecasted this in the in the early stages of the campaign. Between Kamala Harris and put on what were the topics of discussion to look forward to, the same way we did with President Biden while he was running for office, right? The ideal of discussing, and I'm gonna cut my camera on too. Again, that's probably why people just pass through like, man, is you live or what you doing, bro? Yeah, let me cut this camera on. I just came back from fishing, so I did the smart thing. While everybody was stressing and watching, every tick of the stock market, I set me some a hedge. I definitely did that. I put on me some calls and I put on some puts later in the day. Well, and I say later in the day, and after well after we had got above 566 or 565, 566 area, and I let it go. Like I say, I predestined my day to understand that this was going to be a volatile day. I knew that there was going to be a lot of, people who were, over position, i.e., be it margin, be it, zero, days to expiration options, be it trying to figure out what market would truly benefit from the liquidity of the volatility that was going to incur, based upon the press release that Trump was going to do at the here at the Rose Garden down in the DC area. So I know a lot of people are just trying to position themselves ahead of it, which is the wrong thing to do somewhat. unless you have the capital to put out there to risk, because you should never try to predict, right? Even though there was a lot of tea leaves that were set in place in terms of what was going to transpire, what the stock market did not do, which they have a bad habit of doing, is trying to get ahead of policy, right? That's why markets hate uncertainty. Uncertainty throws a massive tantrum in the stock market when there has already been somewhat of a rout in the stock market as we know it to be, in terms of we're already down on the year, but we're not really down, right? It seems like it when you're buying the top, but for those who've been in for the last 2-3 years, when the market was bouncing off the pretty much the inflationary lows, these accounts are still doing good. These 401ks at that point were still doing good. New positions in the market, be it Nvidia, tech sector stocks, they're still doing good. A lot of the small caps were already struggling, so we know that market was already, pretty much in a, kick the can down the road playbook, meaning they needed, ample production to kind of make their days, great again. And, it was nothing new. Again, discretionary staples, defensive plays in terms of utilities, healthcare, whatever. We kind of knew the gist of what was going on in those sectors, right? So we were already planning for this. This is circa pre-Joe Biden coming into office. This is again post-tariffs 2018, 2019. This is Operation Twist with the Federal Reserve, 2019 September to be exact, that month when they capitulated. We're talking about limit down days in the stock market during the Christmas of 2018. Do you guys remember that? Right. I'm curious for people who've been in the game, longer than the meme stock, era, post COVID, who remember tariffs during the first President Trump, tenure. Right? Come on, guys, this ain't nothing new. That's why you have to be a student of history, market analysis. I even make a better quote. You have to be a student of back testing. When you're a student of back testing, not only charts, but back testing data, back testing fundamental analysis, you will be poised to deal with these type of scenarios. Now, it's always different from one to the next, but they always say, hey, it's nothing new underneath the sun. Just have to understand, when to apply your sunblock or put on your shades. That's all it is, guys. It's the same old playbook. So nothing new that we wasn't already preparing for, in terms, at least for what I know that we've kind of studied and hammered through a lot of, drill and ceremony in terms of testing this information up against previous data, up against, understanding how Trump, administered his last administration, what was the meat and potatoes of what he was trying to implement then that caused the market to have a lot of pretty much wind at his back. But keep in mind, the market was up, substantially under Trump. Before really COVID hit, he was kicking butt, taking names, at least in the stock market, because he was the biggest cheerleader of the stock market. The only difference is now that he's not cheerleading for the market like he was doing before. It's because he has a mandate, right? He has no chance of being president again unless he try to pull this king agenda scenario. But nonetheless, again, this is just saying, well, he's trying to write, in, at least in his mind, whether it's, you for him, against him, bad, good, different, whatever. He's trying to do a lot of things he wasn't able to do this first term before he got, again, railroaded through COVID, right? Which sidelined his so-called, great, stats that he was, kind of picking up through, low unemployment. And, again, the stock market was rallying. He was trying to make these little deals to try to reshore a lot of this offshoring that's been going on since, World War One. Again, America has sold itself up the stream without a paddle. And now someone is coming in, whether he's going to be successful or not, he's trying to right that ship. And I'm just looking at it objectively from a market participant. Again, I don't care who's president, even though I care to some degree. I realize money doesn't care about that. It's trying to figure out the way where it can go and land on fertile soil and grow. That's what the stock market cares about. That's what any good investor thinks about. We're reading the tea leaves. We're trying to understand that inflationary value, what that looks like, whether this is a stagflationary environment right now, whether we're headed into what they call a pre-recession, which I feel like we already was in one. Again, circa 2021. 2022, even though they lied about the MB, the MBJ, whatever. No, the MB, what's it called? The National Bureau of Research, or something that handles that doles out pretty much when we hit a recession, when we had 2 negative quarters of growth. They changed the definition of recession. Go figure. All right, under Biden. So again, a lot of quirky stuff and kooky stuff was happening. We don't even have to get into that, but again, coming from a place of understanding the ones and zeros, right? The matrix aspect of the market, right? The dynamic aspects of what the market feeds on in terms of liquidity, in terms of potential projects, R&D, M&A, growth projections, right? CAGR, compound, annual growth rates and scenario like that. This is what's, that's the meat. That's the meat and potatoes. Again, at the end of the day, if you putting this on a rolling scale of saying, whether we're going to have a moment to, take this so-called pullback or this consolidation or this distribution scenario that we're going through this, late cycle of market, rallying, profusely under Biden. Well, you should be excited about this. You guys should be excited about this pullback that's happening right now, right? I am so excited for this. Why? Because number one, we did witness a very manipulated market the last literally 2.5 years under Biden, under Kamala Harris. Again, she was VP under Janet Yellen. And that's important. Why? Because when you think about the excess in terms of what we was dealing with trying to figure out where we was going to deploy that capital, that became a big issue in terms of whether, that money was going, circulate into the stock market. Was it going to go towards Main Street, empowerment, or they were just going to, bank that money in the TGA, right? When the TGA began to fill up again after, it got gutted out from all that, bailing out the banks. Well, that was pretty much the sell, the win in the sell that caused the stock market to rally, right? That's why we was able to get a successful bounce and we rallied off the lows, right? Again, we talking about at the end of the inflationary juggernaut of 9% inflation, we began to trend down. Janet Yellen surgically went to work, right? She surgically went to work issuing bonds and causing, again, the money market account to kind of finally pay out some money, which is rare because we had been sitting at basically zero in the money market accounts for well over, 16, 18 years. We talking about post the great financial crisis that we dealt with back in 2008. All right, so here we are today now dealing with a market where we're saying, hey, this is good, right? You guys should champion it. Now, it's different from Main Street. Main Street is a whole different entity, and we know that to be the case because they are going to be pretty much the guinea pigs to deal with the tariffs, right? We just came out of inflation. People are already stressed out. People are already, eroded in terms of their savings, their buying power, their capabilities in terms of earnings had begun to kind of stagnate, and so they were at a crossroad. Like, what do we do now, right? You're talking about bringing America back to a golden age. You're talking about reshoring again manufacturing. You're talking about making companies pay their fair share, if you will, as opposed to running overseas and parking their money in Switzerland, bank accounts, things like that. The idea of remittance, a lot of immigrants who come here to make money to be successful, then they send their money back home to their their home countries. That's called remittance, obviously. That takes away from a lot of money that's in the system that helps boost the economy in itself. Right. So there's a lot of moving parts when you think about the financial sector as a whole. But nothing new. That we've discussed these things so much that it should be second nature to you guys. We understand how banking and finance works for the grand scheme of things in terms of whether it's beneficial to the end user being the Main Street participant, that taxpayer, that hardworking American at the end of the day. Right? So I'm excited to have that discussion with you guys here today. I know a lot of people have questions about the tariffs. Some people have already been following it. So they kind of already abreast of what's going on. Some of you guys may be new to it. I'm here to, add whatever I can to help. All things that I don't know, I'll be willing to share, that I don't know about it. And we could definitely research it. So, that's what this is all about, right? So it's about build, break, build. What's going on, Aaron? I see Aaron that came in the building. Aaron Bland, what's going on, fam? I don't know if you're there. Your mic is open. Aaron, you there?
Can you hear me?
Yeah, I can hear you. Yep, can definitely hear you.
Yeah.
Sounds great. What's going on with you today?
Just chilling, working, getting all the stuff done.
Okay. Yeah, yeah. I think you were in the one investing group that we have on Facebook with Shanika. Yeah. Yeah. So I see you was posting questions about, how to deal with this, or, I guess the ramifications of it. I'm not sure. But hey,
No,
I'm
I don't
well,
have any questions about how to deal with it. I just want to know, like, what's the point in
yeah.
talking about it? I get it. Like, I understand it's there, but in terms of trading, in terms of understanding today, instead of in terms of
And your
understanding the,
mic is low. Can you speak up and think I do on my
it just switched from my headphones to this. Like, I was like, I see in the, can you
I
hear
can
me?
hear you now.
Yeah, in the
Oh, yeah, it's
group.
breaking up. It's breaking up. It's like a robot scenario.
Oh, it's switched from my damn headphones to my laptop. But what I
Okay, a lot
was
better now. I can hear you now. There you go.
yeah. What I
Yeah.
was saying was I don't need understanding of what the tariffs are. Like they just are taxes. So that's the okay, fine.
Right.
It's the like what's how does it relate to trading, actually trading for the
Trading.
individual
Okay.
who are actually working it, because it doesn't really, like, if we're not learning how to move and use things within the markets, it doesn't really matter if we know what they are. Like knowing what something
Right.
is and doing something with it is completely different things, like
That is true.
absolutely different things. So like I actively trade. I already have my situation set up. I'm in a trade right now, to the
Mm,
upside, looking for some retracements. But when I say those things, a lot of people may not understand what I'm saying when I'm saying them. And of course, according to market conditions,
hmm.
turnarounds, like any of that stuff, like it's one thing to be like, okay, there are tariffs, fine, but what does that mean for actively trading in the market? How
Yeah.
people actively have to trade while under these conditions, and understanding how the fundamentals affect your day-to-day trades versus being like, all the rest of it is kind of irrelevant if it doesn't if they're not getting how to use or how to understand what the fundamentals are doing versus the technical analysis in the trade. You know what I'm saying? Like, yes, he made an announcement today that changed the complete complexion of the market. You know what I'm saying? But after the trading hours, well, after the major day for trading was over, so you only have aftermarket stuff happening right now, retail traders and day traders. But what does that mean for everybody who's trying to learn something? And like, I understand, but I don't know if they
Right.
understand what they.
No, those are good questions. Valid, valid. Now, I don't know if you're familiar with me or not, but I've been doing this for a while, and know Sister Shanika very well. We started, co-started that group a long time ago to do just that, provide a landing page or a landing environment where people could come in from all walks of life, no matter who they are. Obviously, we're very humble people, so we don't come in with egos. We're very, again, average everyday people who have a myriad of different things going on in their life. So it's like we're coming here to learn how to, invest essentially, right? Our main frame is investing. Our side gig is trading, right? So trading is just another way to kind of procure a little, income on the side if you can, if you have the will, the mental fortitude to deal with, the volatility of stock market, movements,
Why?
i.e., different asset classes, etc. Right?
But why
So,
though? Like why
uh,
why look like why have that view of it? Like it's a very like I hear what you're saying, but actually trading, the art of trading, the business of trading
right.
is multiple trillions of dollars a day. Like
You
multiple
have
trillions of
opportunity.
dollars a
Yeah, I see
day.
what you're saying. And I'm saying, let me
No, no,
let
no,
me,
not
let me
no, not volatile. Not,
well,
I
let
don't
me
care about
preface let me finish what I was saying with that. Meaning, I've been around the market long enough to know all the ins and outs of all that, from all walks of it. And so again, my approach, again, me personally, who've been doing it for a while, I always put the emphasis on the investing aspect of it because I've done the
but
trading, I still do
but
trading, but
why?
I'm
But why
well.
put on
Well, that's
invest
important. Why? Because
much
everybody comes
slower?
in with a different set of goals and rules that they have set for themselves. Everybody won't have the trader mentality. You see what I'm saying? Some
But why
people are
not?
thinking about
But why not teach like if trading, which has the absolute ability to bring in like trading is a stronger vehicle than investing because you have the ability to multiply out.
Of course. Again, you speaking somebody that's been doing this well over 10 years. So that's what I'm telling you. Yeah,
Right.
that's where that's a different walk. Depends upon the end user is my point. That's what I'm saying. Yeah, we know
But
all the parameters of trading,
I,
what it
I
will
just
provide
want
you.
like not just like this is my thing. If trading is a skill set, because all it is a skill set. It's not like
That is true.
man, just 100% just a skill set that anybody can learn and anybody can be
Right.
taught.
Right.
Right, right. I'm asking why the focus is on investing, which is a much slower and much like more
Right. So
involved process than teaching, like having
trading.
investing be the
Right.
side vehicle because it does take much, much more to invest in something. It does have a longer time frame than learning how to trade depending on market conditions, which actually is the vehicle which can increase financial input, increase financial output much faster than
Right.
the
So to get
investment.
to the point of trading, one has to understand the value of financial literacy as a whole first, right? It ain't hard to buy a stock, a share of of a company now. It's super easy now, right? FinTech has taken over the market. So when I speak about the ideal of understanding investing, investing is the precursor to understanding how to trade, right? Some people
No,
learn
I wouldn't
different. Some
agree with
people
that.
start it. Well, let me finish. We got to have the conversation, right? We got to be
Yeah, go ahead.
conscious of everybody that might be listening and watching too, right? So the
Mhm.
ideal of that, from what I'm coming from in terms of just delivering information, and I
Mhm.
see exactly where you're coming from because again, I was there a long time ago. Trust me, I've been doing it for a long time, family.
Mhm.
And a lot of people in that group, whether I don't know how long you've been in it or not, but this ain't nothing new for a lot of people that's in there. Some people just, they have different, aspects of how their life is set up where they don't have the time. They don't, right? They have 9 to 5, they have families, they have other things going on. Some people are seed investing, right? They're going out there looking for those other capital allocation, platforms that they can get involved in. So yeah, where you may come from, the ideal of, value in trading, which I do as well. Trust me when I tell you that, because I do it a lot. Everybody's not the same. So it's not a one size fit all, I guess is what I'm trying to say. Right. So if you go through a lot of the old, maybe again, I don't know how long you've been in the group, but if you go, dig way back in some of those old archives, you will see a ton of stuff, uh, breaking down charts, breaking down financial, uh, literature in a way where literacy in a way itself where it could be very applicable. How one should find ways to even find excess capital that they can think about trading with. Right. So I'm definitely with you on that. I love trading as well. And these moments, like what you're dealing with today, for the tariff scenario, is just another trading moment for a lot of people. For investors, it's another scenario to say, well, if I'm looking at this stuff from a cycle perspective, or even better, our brother Dollar Will, that's in the YouTube chat. I don't know if you follow on YouTube or not, brother Aaron. But
Oh,
he's a big Elliott wave theory type of trader, right? So he definitely deals with the Elliott wave, and we understand the values of cycles and understand when we're going through different wave cycles, how you should also posit, a good trading thesis behind that. So it's just depends on the person. I guess that's what I'm trying to get to. Everybody's not going to have the capabilities to deal with the mental fortitude it takes to be a trader, because it takes a lot. If it was that easy, everyone would be doing it, obviously, but we know that's not the case.
so I
Yeah.
disagree with you there on that, brother, because I feel like it doesn't really take a lot. It just is it's actually much simpler than people make it. Like it's very, very, very simple thing.
Well, if that was
And
the
I
case again, I would say this not to cut your wisdom there, then why aren't a lot of people doing it?
how hard is it to cut grass?
It's much harder to trade the market and cut grass. I can assure you that.
Absolutely not. It
I can
absolutely
assure
not.
you that.
Go,
I can
you
assure
take a
you that,
tool,
family.
you go to a field, you create an action,
Yeah.
you end the action. It's 4 steps. There's nothing different in committing 4 steps except you use
I
a
like
different
I
tool.
like the way you think. Then, if that's the case, again, this is me meeting you for the first time. I like the way you think, but I can assure you, everyone else would not have that kind of mentality to do that, because again,
But that's what I'm saying. It's kind of a
right,
I find it arresting to be a preclusion that people can't do that because of other things, but that's not true. It is taking away an opportunity to provide them with the opportunity to develop the skill set. It doesn't really matter if you have a 9 to 5. It doesn't matter if you drive trucks. It doesn't matter if you're a teacher. It
right. You
doesn't
can do
matter.
both. You could do both. I will agree with you on that. But I will say this again: having capital even to get started is another. Having capital even to get started is another. But I will say this again: having capital even to get started is another. But I will say this again: having capital even to get started is another. But I will say this again: having capital even to get started is another. But I will say this again: having capital even to get started is another. But I will say this again: having capital even to get started is another. But I will say this again: having capital even to get started is another. But I will say this again: having capital even to get started is another. But I will say this again: having capital even to get started is another. But I will say this again: having capital even to get started is another. But I will say this again: having capital even to get started is another. But I will say this again: having capital even to get started is another. But I will say this again: having capital even to get started is another. But I will say this again: having capital even to get started is another. But I will say this again: having capital even to get started is another. But I having the
That's not even
wherewithal to
true either.
understand.
That's not true. You can
Well,
literally
let me
start
finish. You gotta let me
$10.
finish because again, I get where you're coming from, and I see that you're passionate about this. Again, you're speaking to someone who's been doing this for a long time, and it's my first time meeting you. I don't know you from a can of paint, but as you can see, I'm open to have discussions because again, if you have any kind of understanding about that group that I know that you're in that I'm in, if you go back and look through all that old stuff that's in there, that old stuff, you will see where we went through tons of this, hours and hours of this information already. So it's nothing new to a lot of people that's probably already in here, meaning in the YouTube chat or even in that group. So they know exactly where you're coming from, and they were just as hungry, they just as passionate. They see a lot of it that way, and then guess what? They also got a life too, and they
But
and
I'm
they
not
are
talking
they
about
have
like that. I think
and
that's the problem I have. It's that they have a life too. I just
right.
worked 4 stores. I have the entire Baltimore territory that I run as a marketing manager. Also, I am a product demonstrator for Meta. I also am a marketing manager for La Cologne Coffee. So I have major contracts from major corporations. That's what I do. I work in marketing for
Oh,
major
out of
corporations.
Philly, I know La Cologne. Yeah, out
Yeah,
of Philly.
yeah. So that's
I've been around for a while. Trust me, I met a lot of people, and it's not me. I know that might as well back too.
right. So that's my like day job. That's like my 9 to 5, like
Yeah,
what takes care of me. I still, because of the nature of what I'm talking about is not dependent on my time frame, is a very static situation. I
yeah,
understand that people may be aware of trading as an action, but I also feel like
yeah.
because of the way that it is being discussed, that it makes people believe that it is harder than it is, or it takes more time, or has a deeper involvement than it actually has. The same amount,
Right.
like marking up a chart can take you 5 to 10 minutes. Like it really doesn't really have to take up that much time. You have a very, very specific set of things to do. You have a very specific set of rules to follow. Like all those waves and this is like that's pointless. Like that's just kind of a lot of fluff in terms of what is actually
Well, no, it's
happening.
not. These are proven. Again, we're talking about technical aspects of the market, right? Where everything has a value, right? Everything has a value.
Yeah, but all
Again,
those things are based on theories. Those are all theories.
well, let me
The
finish.
only
Let me finish.
actual
The,
thing.
the, let me finish this. In this perspective. Well, what you would say might be based upon theory. The market is not exact science. Number one, exact science would mean that this is empirical, falsified information that's already been, fleshed out. The market is not an exact science. So everything is based
Are you
upon
sure about
a
that?
value of theory to a degree. Very much
I
so.
would I
The,
would
the market
disagree
is
with
not an
that.
exact science. If that was the
I
case,
would
again,
disagree that
everyone would be.
the market is
Well,
very
let me
much an
finish.
exact science.
Let me finish. Let me finish in this regard. Again, if that was the case, again, everybody would be doing it
Not
because
true.
it would be a simple playbook where you would just say, "Hey, here's the blueprint to do it every day." Disregard policy, disregard press releases, disregard companies' individuality value beyond that of the ultimate package of the ETF or broader markets. Again, disregard global conflict, global trade, global volatility as a whole. All you
That's
have to
not
do is
true.
come in and do a
None of
few.
what you are
Let,
saying
let
is
me
true
finish. Let
according
me
to
finish.
trading, though.
All you would do have to come in and say, "Well, hey, follow this playbook, and you'll be successful."
But that's all
That
you.
is
That is
that is
true.
not the market. That is not the
That,
market.
that is exactly how it works, though. What you said
That
is
is
wrong.
not how it works, brother. You
That-
know as well as I
I,
know. You've been doing this.
yeah, I promise you. I can
Well, let
prove
me
it to
ask you this then,
you. I can
brother
prove it
Aaron.
to you.
Let me
I
ask you
can
this.
prove it.
How long have you been trading?
How long have I been trading? I wrote my
Yes.
book about crypto in 2017. I had my first trading accounts in 2002. I've been investing myself
Okay.
individually since I was 9 years old, and I asked
Okay.
my
So
grandfather to
so let
take
me
me to
ask
the
you
bank,
this. In
right?
terms of day trading, how often do you day trade?
Me daily,
Yeah. Say again.
pretty much every day,
Pretty much
unless I
every
don't
day.
unless I
Okay.
don't feel
And
like taking a
and you've
trade.
been doing that consistently for how long, if you don't mind me asking?
Consistently day trading about three
Yeah.
years. You heard me? 3 years.
3 years.
Mhm.
Okay, so now take that mainframe. You've been doing this consistently for 3 years. So that means if if everything you've done for the last 3 years is a precursor for everything that has preceded that in terms of how markets have gone through different cycles, different presidents, different administrations, different, again, changes in terms of, again, even when it comes to industry, that means you'd have had to be up to speed on everything that's happening in a way where you'll know those fertile sands, or in this case, we say financial vehicles, you will know those financial vehicles that are very, prevalent, that are great for trading, which is not hard to do. Again, we know that some stocks carry a lot more liquidity than others, but it takes a lot of aggregate data, back testing, understanding base level fundamentals, understanding base levels technicals to be able to do this at a high frequent level for well over 3 years consistently, to make that kind of assertion that there's no way that you should, let me finish. There'll be no way that you should not be able to make money consistently, and everybody should be able to do it. It'll be an easy blueprint to say, I have been doing this for 3 years. Let me give you a blueprint on how to take this information and go duplicate exactly what I do and be successful.
I promise you I can.
I would be very happy to get that book and playbook if I could.
Not only can I tell you who you can get it from, not only can I point you to results, including myself, not only can I show you how the exact same thing I'm talking to you, I can tell you the name of the man.
That's a bold claim,
I watched. Listen to me. Listen, I watched a man.
But you got to keep in mind, when you say
you haven't heard what I said yet. You haven't even heard what I said. I watched a man
do we watch, and it's different than you being able to duplicate it.
Because you don't even know what I said. I haven't said anything yet. Listen to I mean, I can just show you my certificates from passing funding challenges. I post daily about my trades. You can literally see. You can just go look.
That's good. That's good.
It's all up there. Like the money I make.
What's going on, Control? You think I see you in the chat?
But I'm trying to tell you, so like I know you may not believe this, but especially everything you said about like understanding presidents and blah blah blah.
I didn't ever say I didn't believe you. I'm just saying it'd be hard pressed to make that kind of assertion, given the fact that I've been doing this for a long
not at all.
time.
But I have proof. It's not an assertion when you have proof. I have people who I can.
Again, everybody's truth is their truth.
But you're denying mine when I'm saying I have proof. Like I can show you people.
Well, I didn't never deny. I just say it's a hard assertion to make a blanket statement that it will be duplicatable.
But it's not a blanket statement. I'm trying to tell you I can name names. I'm trying to tell you I can show you the system. I'm trying to tell you I can point to multiple individuals.
I like the way you're thinking. But guess what? This is what we do over here. Because
I'm trying to tell you,
we had this thing where we say source up or shut up.
But I'm trying to, but you're talking over me, trying to.
No, I'm going to give you the floor so you can show your screen, show your information. That's what I'm going to do. Let me.
Oh, okay, I can do that.
Sure. Yeah, that's what we do. Again, you don't know me, I don't know you, so you just in the group, and I'm in, and just giving you the floor. This is what we do over here. You have to be able to prove that to people, because we don't just throw out, assertions like that unless we can back it up. That's all I'm saying.
Yeah, I got you. Sure, no problem.
So, because that goes against everything that we preach about in terms of, again, due diligence and discipline. And
right,
that's our moniker over here. We don't throw out incendiary terms unless we can kind of get
like you literally took everything that is actual fundamental analysis, which is you talking about presidents of the past and all that, which is just fundamental analysis. Said those things
policy, agendas, money.
But that has absolutely. I understand what you're saying, but that has absolutely nothing to do with understanding what happens in the current market and current market conditions, other than being able to go back and look at charts. Like, it doesn't matter what President Carter did during the gas shortage today, because the gas shortage is not happening.
It provides liquidity that's already spent before it hit Main Street.
Hold on, let me finish. Well, the only way that matters is showing something on the chart, because it is not the current condition of the country, because it is not the current condition of the overall sentiment of the feeling. The only way that exists at this point is technical data. You can see the technical data and how that plays out, but fundamentally it has zero impact. Like if you take a day like today, you're talking about the tariffs, right? Everything about today, according to the tariffs, is fundamental data. It's pushing the fear or the greed index of whatever's going on. That's all it is. It's literally the idea of something happening versus what actually happens. You can see that in the market all the time. That's why you have the difference between the Asian market, the European market, and the American market. All of these markets have different fundamental impacts on the market themselves. what happened today is going to affect the Asian market differently because it's coming online after the fact of the news. It's going to affect the European market differently because they are also being
Asia
able
comes
to.
online at 9. Japanese comes on obviously early. London comes on at 2 a.m. Yeah, I'm familiar. I've been doing it for a long time.
London starts at 3, technically. London starts at 3 a.m.
Yeah,
Japan starts at
pre-market's at 2. So it's the same thing with futures.
yeah,
So
but
we
but
trade.
pre-market don't really matter. It only really matter if you institutionally trade it. Like institutions run it, just like
Everybody's different because some people do trade futures as well. So it's
but
the
that's
same
still
thing.
but it's still institutional trading. That's what I'm saying. You are only speaking on techniques while I'm talking about markets and overall sentiment. That's the difference. I'm not talking about
What's
techniques. I
going on
haven't
over,
said
Chris? In the building. So from time to time, I don't want to act like I'm cutting you. I'm just speaking to everybody in the chat too. I'm just.
Oh yeah.
I mean, YouTube going to. Yeah, so definitely, man. I love your energy. I'm humble. Share your screen, man, and give us some data, man. And
oh yeah, sure. Give me a second.
Yeah,
Let me pull up my
you got the
charts.
floor, man. We love passion.
All right,
We
here.
love financial literacy. This is what we do. Again, we've been doing it for a long time. Again, I'm gonna introduce myself to you again. My name is African Emporium, AE. Everybody knows about AE. Again, we've been doing this for a long time, again, and within our groups. Again, we do come from the place of this due diligence and discipline. Again, like I said before, we're very, humble, people in this craft. We do value the investing aspect over trading because we think in long term, you build wealth by being a gradual, participant and understand how the system works. Once you understand that, then you can go as far as you want, i.e. day trading, i.e. other asset classes, doesn't matter. But having a great fundamental, cornerstone that you can kind of, stand on in terms of understanding how the system works. That's where we come at this from, right? We want to teach people.
The sharing is
the nuts and bolts.
I hit a sharing request. It's not.
Hold on 1 second. I might have had it off. Let me see. It'll come up here. What's going on over, Chris? I see you coming in the building. Yeah, you got the floor, man. And again, we love when the family come in and drop knowledge, and the floor is yours, man. And
all right, I'll put it to you like this. All right, so this is a crypto, right? So this is AVAX. AVAX is the cryptocurrency of the company Avalanche. Avalanche started out as a gaming company. They're like, if you got kids and your kids buy Roblox and Bucks, blah 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 blah.
Yeah, for me.
Yeah, Avalanche as a company is like the financial system behind that, right? That's just what that is. What it is. Like to trade this asset, do I need to know all that? No.
Well, that's crypto, because not crypto. Excuse me. That's when you're dealing with currencies, it's a different, right? Because it's not tied to any kind of particular product or service. It's tied to currency, right?
Say that again.
It'll be tied to this is
Well, this is AVAX. This is the cryptocurrency for Avalanche.
I just want to say this. It's more of a commodity in the sense that's how they've been. That's pretty much what they've dubbed crypto at this point. It's commodity, right? Because you can't tie it to any particular use case unless you go to the application layer of that particular asset itself. But no.
I mean, not that don't really matter in what I'm talking about, but fine.
Yeah, floor is yours, man.
Yeah. So anyway, this is just what this asset is. So if you look and see, like, this is my chart, right? Very, very simple and very simple markets. And this is why I say trading is much easier. This is just a weekly line of rejection. This is just a daily line of rejection. This is another daily. This is a monthly. This is a resistance line. And this is a daily, right? All I do, I don't back test nothing. I don't have to do none of that. All of that is irrelevant in terms of being able to actually see what's going on. All you actually have to know is what controls something. So for cryptocurrencies, what's the reserve of cryptocurrencies? Like, what is the bar, right? What cryptocurrency controls all the other cryptocurrencies?
Now, hold on. I don't want to get lost in the sauce because, again, this is a conversation based upon you being able to delineate,
I am.
How important. Well, I'm just saying, because I gotta say this. I gotta say this.
Yeah, hold on, brother.
Let me finish. I got to say this in lieu of the conversation because, again, I open this up to speak about the tariffs to people that want to talk about tariffs. And again, speaking to the idea of just trading as an aspect of understanding how the markets function under news like this, We're speaking.
Well, that's exactly what I'm gonna show. That's exactly
what I'm saying. You're speaking to the idea that you're saying that anyone can trade, which we know that to be true, but we're talking about being consistent.
Right. So if you let me finish, I will show you how to do that. You gotta let me.
Where anybody can do it. That's a let me preface it, because again, it's kind of stopping to be what I was trying to get to. It's so to make that level of assertion, whether you know whatever, you're speaking to people that's in the chat that whether you know them or not, they've been doing this for years.
Okay,
so you're speaking to a novice crew is what I'm trying to get you to see. So if you make that assertion, it's people in the chat gonna be they listening like, okay, this guy, do he got something that we ain't already been seeing?
Well, you gotta let me show. You keep talking about that, but I gotta show you for them to be able to get.
Well, not trick. I don't want you to show me your technique. You need to show. You would have to show us the fundamental and the technical. Baseline.
You gotta stop talking for me to do that, brother. I can't.
You gotta let me get my conversation out to the people in the chat that's listening that came here to talk about tariffs. I got to preface that so they know why you're having this conversation.
Okay, well, I can literally show you the tariff. I'm gonna show you all that. I'm gonna show you everything.
That's what we need to get to, because again, I got to be able to still delineate to the chat what's going on, because they don't know you.
Right.
They don't know you. They hear you for the first time.
I mean, science is science, so it don't really, I'm saying it's just
okay. I just got to make sure we clear that, So
okay. All right. So I want you to see, if you count, if you guys know what candles are, everybody understand. You see these 2 green candles, that's the last couple hours, and you see these 3 red candles from the top green line. That is a weekly level of price. When Trump was talking, if you see the middle of that first red candle with the 2 spikes on each end, that's where Trump was talking. When he first started talking, that's where price was. Him talking, literally just him talking and talking about what he was saying, made this move happen. Without Trump talking, the market was already heading in an upward direction. The reason why, and if you're talking about fundamentals, you said stuff about presidents in the past, this and all this. The reason why the market, if you look at all of what's here on the screen, the reason for this movement has all been based on tariffs. It's all been based on Trump and him talking. Everything you see in the last you see the current candle in the last 1, 2, 3, 4 hours. If you just go back 4 hours, and this is the hourly chart, so each one of these is hour, is based on Trump talking and tariffs. The mention of tariffs on a daily basis, or any day, anytime he talks, anytime Trump talks, anytime Jerome Powell talks, there's always going to be movement in the market. Jerome Powell is more powerful than Trump on a world stage. He is the chairman of the Federal Reserve, controlling interest rates, how the money moves, all that stuff. Literally, he is the voice of God when it comes to the United States dollar. What Donald Trump does is put fear or greed into the average investor or into the market itself. As you can see now, as the green candle is starting to climb up, it's just coming up to a retracement. Because of what Trump did, because of what he said, it pushed the market down to where it had to go back and collect more orders. Not because
so real quick, and I don't mean to cut your wisdom again, Brother Aaron. So again, let me preface again. The audience you're speaking to, these people been doing this for a long time. They know everything you're already saying.
Are you certain?
I'm very certain. You don't know my audience. That's what I'm trying to get you to see. This is my first time meeting you, but we're seasoned people. We've been doing this for a long time, family.
Yeah, you got to get to what you.
Yeah, I'm trying to figure out. That's all I'm trying.
Yeah, I mean, y'all trying to talk.
I ain't trying to cut your wisdom, but
instead of listening,
I was trying to get to the point where you make that assertion where if you say that to people who've been doing this for a lot of years, they already understand that everything you're saying and then some. Run whole Discord groups and teach people.
Yeah, you got to get to what's special about what you say.
Yeah, so that's all. I mean, again, not being rude. I just want to preface that. Where you don't have to waste your time going through this. We're just trying to figure out, if you make that assertion, what will be the catalyst to make such a level,
I'm trying to show you. Y'all keep what you are doing is existing in a cloud of doubt. Everything I'm trying to actually tell you, I'm literally walking you step by step by step. Not only how the chart is set up, not only about using the technical analysis and the fundamental analysis to actually be able to do this each day. I'm trying to show you step by step by step how it actually works according to each day and why you can do this each and every day. Why I'm in classes with billionaires and millionaires and I made $2,200 in 10 hours because it's very simple to do.
So you're coming. So again, that's why I had to say that. And I
very
don't want to cut your wisdom, brother.
New, bro.
But you're not talking to people who just started yesterday. This is
I'm not, yeah, but you aren't actually letting me say anything.
Chat,
you just continue to tell me that people know things. However, you have not told me how any of these people are consistently profitable in anything they do. You have not told me about anything that does it.
Hold on, give me a second. Give me a second. Give me a second. Give me a second.
Ask me to show you something, and I'm attempting to show.
Let me
I
reset the room.
cannot
Give me a
show
second,
you
brother Aaron.
if you continue to
brother
talk
Aaron,
over me.
brother
How
Aaron,
am I showing you?
Brother Aaron, let me reset my room. Because I know you're coming in hot, you're coming in passionate. And you got to understand one thing again about how we kind of correspond with our audience and how we move. We're not in here to measure account size. We don't do that here. We're here to, again, speak about things that are already known to a lot of people that already followed us and follow this channel and follow other people who got their own channels as a way of just updating information that people already may have, and they're comparing notes. So again, the majority of people that follow this channel already know technical analysis. They already know fundamentals. They already know global macros, global micro. They understand a lot of the ebb and flows of how markets work from a trader perspective and also that of an investor. So again, I'm just speaking to that and the idea of what those tariffs look like for those people who might have came in late, and I'm just giving them a blotter report, so to speak. So it's not about
get to the point that what's making you what you teaching special.
Anything outside of that. And again, it came in to speak about the value of the tariff. That's all. Yeah. So I know he's passionate. I like that. So I'm gonna let him build. But again, just the idea that you was making an assertion as if, you know, you can do this because you only been doing it for 3 years, trading 3 years, and people been doing it for a lot longer.
Yeah, we've been doing this a long time, bro.
Yeah, a long time. So it's like you're preaching to the choir. I'm just trying to save him the house. Dang, he left. Oh man, come on, bro. Okay, he left.
Okay, that's fine.
Yeah, I was trying to
ego too big.
But I guess he don't understand. He don't. I don't know him, and he was just seeing. He's he's just a sneaker group, and I was just posting. I was like, yeah, you can come on and speak about it, but I don't know. I don't know.
I can just tell he just. I'm just like it's good. It's cool, doing step by step, but I'm like that's nothing new. We already know this already. Appreciate that, but like get to what's special, like the whole synopsis of what you're talking about, because we already know everything you're saying. Like, and that's an ego.
Yeah, he made a statement earlier, and I was just trying to correct because I was like, there's technical and fundamental, which we come from the school of understanding the limits of the market. We don't get stuck in one, avenue only, right? There's multiple ways to be to dissect the market. And I was speaking to the idea, like, Brother Dollar Will, he loves the Elliott wave, and he pretty much said the Elliott wave is useless. I'm like, whoa.
Oh my God,
that's a bold statement. Talk about cycles of the market. That's what the Elliott wave does. That's a proven, technical, parameter of looking at the markets and IDing that to help you, to see changes in markets, right?
Right.
So he kind of just threw that out. And again, it's no disrespect to the brother. Everybody has their own formula. Yeah. But again, he's not speaking to people that just started yesterday. And for people who just started yesterday, you can never teach them from that perspective of saying that they have to know exactly what you're thinking about osmosis, because if you show them lines on a chart and say, well, no, this line is this and this, that, and the third, that's not how they learn. You got to give them building blocks. You got to start at that cornerstone first, teaching them the whole minutia up until the point where they can see how that, puzzle comes together.
Absolutely.
It was just a incendiary statement. I guess, I don't know. I don't know.
I
just posted a link. I open the floor up, but again, I'm always going to be respectful of people to get off what they got to get off. But, we also are careful people over here. We don't just say anything. We got to source up.
Yeah.
Shut up.
There you go. There you go. I'm like,
I don't know what circles he running. I can't, I'm not going to be the ID the guy, but again, that's just the
talking about trading with billionaires and institutions. Yeah. I'm like, bro, what does that have to do with anything?
Yeah,
that's irrelevant.
You making an assertion, you got to be able to prove it.
Yeah.
Man, that's the billionaire. He has a different perspective, and I don't know. No disrespect to the brother, though.
Yeah. All right. That's not what we do over here. It's not a ego thing. You know, everybody learn, everybody earn over here. So, you know.
Yeah, that was again. I get it. Again, again, brother Aaron, if you're out there, hey, you're welcome to come on, man. We didn't boot you. You left, but you gotta let us preface things. If you make statements, we got to be able to relay that to the audience properly, because again, we don't make assertions without being able to have at least some kind of empirical evidence to be able to back that claim, if you will. Right. So no disrespect to you, family. Again, it's my first time meeting you. But you got to be able to, speak in terms that there may be someone out there who may not understand where you at with that, even though people in the chat understand what's going on. But a person that may be coming through, they may have a different perspective of all that, and those are bold statements. But beyond that, man, what's going on, Oba Chris? How was your day, man? How's everything going?
Pretty good, Oba. Can't complain. Had to finish up a little errands that I was running, so I came on a little bit late. But how about you?
I just I posted it that what's going on as far as that, and the tariff. I'm pretty sure you guys already seen it or whatnot. But yeah, I was just like, man, this kind of what we was talking about the other day, during the live we did concerning yours about Pokemon cards data versus the S&P 500,
right?
As a baseline of understanding investments, in terms of what's what has a lasting ROI.
Mm-hmm.
And again, backside of that is understanding what the overall market looks like to be able to afford someone the ability to do discretionary based investing like that, or novelty based investing. And of course, given the trajectory of markets,
right,
if they're going to have a harder time trying to get off a Pokemon card as it is to invest in a Amazon or a Netflix or in a video or whatever.
exactly.
Yeah. So
I also mentioned too that if I bought shares in Netflix and that person bought a Pokemon set, I'm just like, man, at the tap of a button, I can sell my shares like this, because there's always going to be a buyer of stock of Netflix. Now, it's probably going to take you a little time to sell your product. You probably going to have to wait till the next day. You got to drive and meet the person. You got to vet them and all of that. Well, hey, it's magic when I sell my shares, because I just hit a button, sell.
Yes, fingerprint impression.
Yeah, it's gone.
Grand opening, grand closing.
Grand closing. Simple and plain.
Yeah. So again, it's just it's very well, I would say this now, given the fact that just kind of bringing that conversation into what we were going to discuss in terms of tariffs, the idea that these markets are now going to be under a lot of scrutiny in terms of being able to try to again own up to the ideal of a lot of these valuations in terms of people having this excess liquidity or excess capital to invest in discretionary markets, right? Now, tariffs, as we know it to be, in terms of a somewhat of a if you will, VAT tax, a value added tax, or the idea of how we do it in terms of currencies and the valuations of certain currencies, what that looks like when you're trying to import something or even export it, and having your currency kind of adjusted to be able to play that, kind of pay that carry tax that comes along with it. Again, when there's a lot of things that are moving around in terms of the overall global macro, and when people start feeling like money's starting to be a little bit tighter in terms of allocation value, again, R&D, M&A, whatever the case, again, it's an osmosis thing, at least in that regard, because it's like, okay, well, if big money institutions are starting to kind of pull back or play the weight game, then maybe maybe I should as well, as a Main Street person,
right?
As we say, again, checking the tea leaves, right? or follow the money. Again, one of the greatest quotes ever, follow the money. Yeah, so today, again, it's just a day of reckoning that we've seen before. Again, like I've said on the last live stream, this is circa 2018, 2019 all over again. We've seen this before. The difference is now is that the market is, is a lot higher than where it was before. A few more different, pieces of the chessboard has been moved around now in terms of industry. And what does that look like in terms of being subjected to what those tariffs look like? Because again, you guys remember 2018, 2019, circa Trump with the first wave of tariffs. Well, what were some of the companies that were, again, affected by it, right? It was a lot of those hardware-based companies or even retail-based companies or stores or whomever that were receiving products from overseas, right? A lot of their import was coming out of mainland China, which they were basically the directive behind Trump tariffs, right? He really put a lot of emphasis on China, which he's still doing now, but he was hitting, Europe along the way, but it wasn't as much as it is now, because now this is a blanket tariff, right? We're going after everybody, right? To try to come up with some kind of form of, bringing in, external revenue, as he called his new agency is called the ERS, right? Go figure, right? External Revenue Service, right? To work alongside the IRS, they're going to have the ERS. And, I know you've been following this stuff over, Chris, as well, in your own right. And it's interesting because when you think about what is that going to look like, in terms of being able to equalize some of that of the deficit spending that they're trying to procure, obviously, because that's what it's really all about. You either going to lower your deficit spending, or you're going to have to increase, kind of figure out where to increase production, or you're going to have to kind of figure out where to bring in more tax, right? Either way, the latter of the two are Main Street crush, kahuna crushers, so to speak, right? It hurts people if you're not in the boom cycle, right? You got to have a cycle where people have ample savings to be able to kind of put on such a, again, a play like that in terms of being able to, generate, again, revenue for the government, so to speak. So again, just speaking to that, let me go over here, because I know you probably, again, whether you've seen it or not, but just kind of speaking to the idea of the tariff as a whole, what are we dealing with here, right? This is straight from the White House itself. This is their reciprocal tariff breakdown, right?
Yeah.
And so it's kind of giving you the gist of what other countries have charged us, what they've been charging us, and what we're planning to do as a if you will, retaliatory type of implementation of taxes to kind of equal out the playing field in terms of trade, right? But we know it ultimately, at the end of the day, all a tariff is a negotiating tactic, where one dominant economy may be trying to get a lesser either up to their level if they want to do a lot of business with them, in terms of renegotiating certain products or services that they may offer, and trying to, barter it out, without a lot of, bloodshed, at least economic bloodshed.
Right.
Yeah. Or it could be used as a form of a soft sanction. I repeat, it can be also used as a soft sanction, right? Up the tariff on a company, you're still doing business with them, or country, you're still doing business with them, but they're having to pay you more if they want to have access to your clientele, right? In this case, it would be the U.S. citizen, right? The biggest consumer on the planet is our purse, pretty much.
Right.
So again, this is just based upon what came out of the White House today in terms of how you still take this information and say, well, when we do our so-called, dissecting of data, we say, okay, well, a lot of the products that come out of China, which we know the basis of what they do produce a lot, for the world as a whole, they are the world manufacturer at this point. They've overtaken everybody, became that kind of zenith, or that, that archetype that people aspire to be at this point. Why? Because they did a lot of so-called, storing up a lot of, food for the winter during their downturn when they was going through their, their renaissance, right? Before China really kind of kicked, jumped off the port and said, we're here now.
Right.
So now being the biggest, one of the biggest, countries that has the ownership of the biggest commodity market on the planet, that's problematic for a lot of people. Why? Because they're controlling all your base commodities, so to speak, at a high level, where they don't necessarily have to deal with other people. The one thing that they don't have access to is a lot of the oil, right? That's why they're some of the biggest, oil consumers on the planet, right? Because it takes a lot of fuel to run those factories, right?
Yep.
To outfit what they're trying to do. So that's why you will have a level of a trade negotiating tactic in a way where you can kind of equal out some of that, that need, because you're wanting the end result product that they're able to manufacture and fabricate, but they need fuel to be able to kind of power their, their instruments to be able to produce that good that you want.
Right.
Now, with that also being said, in this day and age, in terms of where we're dealing with the technological advancements in terms of AI, all this new revolution stuff that's pushing markets to a different, I guess, I don't know if you will call it a different mainframe to look forward to within the next 10 years, right? Because we know industry changes over every 5 to 7 years. It used to be 10, but it's moving a lot faster now, right? Things are moving fast. You be in one cycle, next thing you know, they're changing, moving to something else, right? Just we're moving now as a global society a lot faster now because we are in the age of information. So just given to the idea of the tariffs again, for people who already seen this, already know what's going on, the implications of most of this is based upon, again, trying to renegotiate a lot of those old, if you will, trade policies that were implemented way back during Bretton Woods time. Even before that, we're talking about Jimmy Carter, even some of them, i.e. during Lyndon Baines Johnson time frame. Like a lot of these countries were just still coming online. They were coming out a lot of, their own, internal scenarios that they were dealing with, be it self-inflicted or the ideal of, other colonial powers that were kind of, suppressing their growth. They began to get their legs underneath them. They began to look around their countries and see what the natural resources that they offer and how they can fabricate those things to be useful, commodity and or, product they can offer to the world. And they say, well, hey, you guys are the big dog on the block. Look, y'all got all the money. Y'all want what we got. We're gonna, have to put tariffs on your stuff to bring in income to be able to produce some kind of revenue that government can use to now to subsidize some of our startup, businesses that are coming online. Essentially, I'm trying to put it in the layman terms best I can, but that's how all this stuff came to be. So they began to just put, these astronomical tariffs on America because they figure like, hey, y'all got it, right? Y'all got it, bro. That's basically what it was.
Yeah.
Let me hold something, right? They were like, let me hold something. Let me hold a couple dollars. And America was glad to pay it. Why? Because they said, well, looking at it from a place where you have a natural resource that we can leverage, we're not going to cry about it. If it's going to help you get off the ground fast, we'll pay that extra tax, right? Unless it becomes a burden to us, we'll let you run it. So keep in mind, a lot of these tariffs that were put in place, they've never been renegotiated, going over 30, 40, 50 years, some of them 60 years. So this has been blanket across the board. They've just been, so as our GDP has grown and we've risen as a country, well, guess what? That's a major share of taxation, at least on a compound annuity growth rate value, where these countries have been eating off that, right? They've been eating off all that growth too, right? The idea of cost of living going up and being able to kind of, move accordingly with those currency exchanges, or at least the rate value of it. So the dollar, again, began to suppress a lot of these other countries too. So they're like, well, we can't compete with your currency. So the best way we could do it is up the ante of the what? The tariffs, right? We need to get on the back end through the tariffs, right?
Yeah.
Because y'all want these plantain chips from, Malaysia or whatever, right? And so that's kind of the gist of it, in layman terms. Again, some of you guys already know this stuff ain't nothing new, but this is where we are. So again, just kind of going on the list, you got China was sitting at 67%, tariffs that they were charging the U.S., to have our goods imported into China. Now we know China is the biggest They pretty much what they King Cooper.
Yep.
Because communist regime, they're very selective about what they allow to come into their country. Again, they won't even allow none of our social media companies into it in their country. They won't allow none of that stuff in there because number one, they don't want the influence to overshadow what they're trying to profess in terms of the communism to their pretty much their constituents, their citizens. So they don't want American social ideology to infiltrate them, right? So that's why all that stuff ain't coming there. But they will allow manufacturing to come in, right? Because again, well, what's the trade-off? You want our labor, right? You want the natural resource that we already kind of house to be able to manufacture this product that you want, so you can get a better margin return if you go back and sell it on your own, reshore it basically, back in your own country. So by way of that, we're gonna charge you a little more for that labor. So whether they're giving that, spreading that money equitable through their citizenry from the government, that's one thing to be kind of assessed whether it's happening or not. But we know that they had one of the fastest growing middle classes literally on the planet, up until at least I would say COVID. Let's say COVID stopped a lot of their boom, right? China had been in an amazing boom for well over 20 years, well, at least 13, 20 years, right? And COVID shut down their factories. Think about that. They went from making all these products that the world was benefiting from, at least the Western powers, first world countries, and which I hate that term, but I'll say it just for the sake of the conversation. And they got they went offline because of COVID. So they had to shut down all that growth, projected growth that they were already banking in. They had spent that money before even, collected, essentially.
Yep.
So that became an issue for at least with them. Now, everybody else, meaning, I will say this again, they had enough money already put away where they could weather that storm. I guess what I'm trying to get at, right? So it was nothing new to them. But a lot of these other countries, they can't afford to miss a meal, right? They can't afford to have their factories shut down or business disrupted, or things like that that destabilizes their government, so to speak, right? Or them at least bringing in income, generating income, be it through tariffs or again exporting their products. So again, just going down the list real quick. European Union, they were charging America a flat 39%, right? Pretty much, and it's just what they call a blanket tariff charge when you look at the overall things that they was hitting in aggregate form, just what that came out to in terms of percentage, right? Like they were charging maybe 40% on cars, they were maybe charging 60% on American I don't know, vegetables, whatever, right? But in the aggregate, it comes out to be 39%. Y'all tracking with me? So that's the basis of why these numbers look like the way they are in comparison to what these new tariffs that Trump then put forth here. These are what they consider to be discounted rates of tariffs that we're putting back onto these people, meaning we were already paying either at these levels or a lot less. But in most cases, what he described during his press release today, that these were a lot less, and he was just trying to equal the playing field a little bit under his mind, right?
Right.
So again, European Union, 39%. Vietnam was charging us 90%. Now, some would say they probably got a reason to do it because of what happened during the Vietnam War.
Yeah.
Right? We literally destabilized their whole, that was basically a form of warfare colonization.
Yep.
If I could be honest, right? Because y'all know we like to talk truth to power over here. We ain't gonna sugarcoat that. They got hit with, that was horrible what they went through. So to open back up those channels of, communicate to the rest of the world, at least to be able to have access to our citizenry, our consumer market, it was like, hey, we're gonna charge y'all 90% because we got to rebuild all this stuff that y'all, destroyed. As people still get, landing on, stepping on landmines over there to this day and getting blown up, right? And that's before you can talk about the Agent Orange, right? The biological warfare. It's brutal, right? War is brutal, man. It's horrible, right? So they were charging 90%, so again, Trump hit them back with a 46%. So I guess he's like, hey, that was so long ago. I don't know. I'm paraphrasing. I'm not even in the mind of Trump. This is not me agreeing with him or not. I'm just putting it out there because when we look at this stuff as fuel for an investment thesis or a trading thesis, we're basing this upon how the rest of the market is going to look at this, meaning the global market, and look at this stuff and say, well, how can we benefit from it? Or, is this going to be a crutch on us somewhere where we were just starting to really, get off the ground post-COVID and get our, our hub back up and pumping? This may sideline us a little bit, right? This may slow us down a little bit because this is exactly what this is going to do. The numbers that I'm seeing here, this is enough to destabilize a lot of projected GDP. It's going to destabilize a lot of projected GDP, excuse me.
Oh, yeah.
Right. You already see what they did today with ours, right? You had, I think that was Barkin, one of the Fed governors, pretty much came out and said that now they're projecting that we were supposed to be at positive 2.4% before the tariff stuff really became a big topic. Now they're projecting that we're going to have negative 0.37% point, right? Percentage points at least. That's a lot.
Oh yeah.
So that's a precursor to the idea that people are already skittish about the idea of recession being an issue, where you have, basically 2 quarters of negative growth, which is the baseline definition of what a recession is. Well, guess what? This next quarter, if there's anything under that negative mark, that's your first quarter.
Right.
That means anything subsequent after that, if these tariffs take root and nobody comes to the negotiation table to change this model here, then yeah, we need to be preparing for, number one, inflation to kind of stick. It's already going back up in with the inflation scenario, but we need to be prepared for the idea that a recession may come too, right? Because we've already shot our shot with NVIDIA, right? NVIDIA was the one, golden, egg that brought us out of the tariff funk, if you will, right?
Yeah.
We already knew about AI. They shocked everybody with that. Like, came out of nowhere. Okay, we did blah blah blah. Like, dude, AI ain't nothing new. But anyway, we'll let them be. But again, for us, we ran out of a lot of different so-called. We pulled a lot of aces out of our hole a little bit already, where we ain't really got nothing else that we can fall back on at this point.
Yeah.
Right, because DeepSeek, that whole issue with the DeepSeek up against that of ChatGPT, that sank that whole narrative. Right, they were investing hundreds of billions of dollars into the AI, boom craze, and then DeepSeek came out and said, "Hey, we did all that, and then we made it better for less the money." That completely rocked these people, mental core and their financial core,
right?
In a way where that means you can't justify the evaluations any longer, right? You can't, because here's a model that's cheaper, efficient, and it's open source. Like, how you gonna compete with that? How you gonna charge a client knowing that they can use their language model that's open source to, outfit their business model that they need, unless they need to buy the chips? That's the only thing that's really going for NVIDIA at this point. They still have a great edge on the market when it comes to the chips. But in terms of the coding, the language model, right, you don't need people to do that now, right? Because they can buy less than what they would have thought they would have needed in terms of buying all those Hopper chips. They could just buy 1 or 2 and they can get the same results that they would if, that if they were trying to, do it the long way, if you will. All right. So that destabilizes the market. I guess that's what I'm trying to get at in that regard. I'm sure you guys have been following this stuff. But again, with that somewhat being dethroned, the idea of the AI, how can I describe it? The AI craze, I don't know, maybe if you want to call it the cycle of the AI, boom, it's kind of hit its peak. At least coming from the place where you look at the hardware and say, you won't be able to outfit your economy or your industries or your infrastructure without having access to, quote unquote, the NVIDIA chip. That ship didn't sail, right? Because again, they can just go straight up open source and use the same model that you're getting from DeepSeek and maybe do the same thing for a fraction of the cost, right? Unless they're doing servers, right, which is different, right? Because you need compute power, you need those chips, right? But anyway, that has destabilized that whole market. So now, I guess what I'm trying to get at, you need a whole new different, industry to pop out of somewhere, or some kind of form of extra layer of compute think tank that to better streamline businesses, to get another tailwind underneath the market to move it at this point, because you can't bank on the old one anymore. That playbook is already ran. They already ran that play. I use that kind of terminology. They ran that play already. That play pretty much over.
Right.
You follow me? So what's next? What's on? What is the only thing that America has left to run with? Right? Because if you doing the reshoring thing with the manufacturing, you're gonna have to get it up to scale and get it up to scale quick. Keep in mind, Trump only has 2 years before the next primary election scenario kick off to get off what he needs to get off.
Right.
All basic 3 branches of government, judicial, basically both houses, in terms of on the legislative side of things, Senate and the House Representative, you need to get off everything you can now, and you need to get it off without a hitch. Because if you're going to reshore manufacturing, you got to have the infrastructure ready in place, meaning you got to go to all around the country where those old rust belt type of manufacturing hubs used to be. If you're talking about refurbishing them to bring business in, we already know about TSM, right? They were already starting to do something down in Arizona under Biden with the CHIPS Act. They allocated a lot of money to bring them here as well, because of the whole idea that China may invade Taiwan. So nothing new there. They were already doing a plant down in Mexico as well, but now that's going to be on hold because the tariffs issue, right? Is they wouldn't want to do business with them as a way to kind of slight America in terms of the tariff, right? They don't want that to deal with that, right? So it's going to get real crazy. Again, we've seen this before under 2018, 2019 under the first tariff war. If you guys remember, remember the whole idea with the farm issue about the crops? Remember, all our crops had pretty much rotted in them silos.
Yeah.
And they couldn't get them off the ground. So we had to come up with other ways to take in tariffs. Literally, the tariff money they was bringing in from China, that was money they were using to subsidize the farmers. I don't know if y'all remember that. That was literally the money they was pulling in to subsidize the farmers with, to keep the farmers from basically, getting them pitchforks and coming up to Washington.
Yep.
Because again, they were trying to get China to buy a lot of the crops, the soybean. I don't know if y'all remember that. And then what did China do under COVID? They bucked on Trump because the world got shut down, destabilized, and guess what they did? They went straight to Brazil.
Yep.
Straight to Brazil and cut a deal with Brazil to buy the soybeans, because Brazil is the second largest soybean producer on the planet, guys. I don't know if y'all know that or not.
Yep.
They're the second largest producer of soybean. So basically, China went direct to market. They cut out the middleman and pretty much eliminate that whole control aspect of wanting to buy, or at least hold up their end of the bargain in terms of what Trump was trying to get them to do in terms of buying those soybeans. They reneged on it, essentially. It was nothing that Trump could have done at that point, because it was coming up on the election. COVID was kicking everybody behind. It was so many things going on. He could not focus on them and them alone, right? So China was doing what they had. They leveraged the pandemic. Right?
They have to do what they have to do.
Right. And so that's what you got going on now with a lot of these, these countries. They kind of rerouted a lot of their business, because again, even what happened with COVID, i.e. what's going on to the day with emerging markets, having to kind of really get their feet back underneath them, places like India and a lot of the other emerging markets in Brazil and many others. They began to kind of spread their net a little bit wider. Then all of us feeling like they were just beholden to American, oversight, right? Meaning they went through America first before they even think about going to somebody else. They will at least check with us first, right? Which is weird, but again, whatever. Well, that ship has sailed. And what the tariff war may do, it may try to rein a lot of these countries back in now, and say, well, hey, again, y'all remember when things went a little awry with us during COVID, y'all went and set up shop in other places, and y'all were still charging us, a lot of money, to import a lot of y'all goods, right? Under the same, model we had before. Well, guess what? We finna change that.
Yeah.
Right. We're gonna force y'all back to the table now to do business with us, in a different light, under a different perspective now. Now you can choose to say, keep things the same and we'll just kind of, run it. Overall, you can't compete with our spending value, right? You can't compete with our GDP. So let's do business. Let's renegotiate. Or again, you can kind of figure out what that looks like dealing with other people that may already be hit with tariffs from us that also may lessen their ability to do business with you. Does that make sense? In a sense, that's kind of what they're trying to do. They're trying to force people to the table, and destabilize some of the business, dealings that they've already established with other countries too, if they can.
Yeah.
Right. So again, that's what makes it very kind of weird, because we know what it's going to do to our market. We kind of already got an idea. We were already at, in late cycle of a crazy bull run as it was. And we haven't had a recession in, like, it seems like forever.
Yeah.
We had a black swan recession due to COVID, but it was a black swan. It wasn't based upon erosion of, just, the economy just going bad through, bad policy, bad whatever, right?
Right.
It was a shock recession. So it wasn't necessarily what they consider to be a real recession.
Right.
This could implement a real recession.
Mm-hmm.
Right. Because we still trying to get our feet back underneath us as well post-COVID. Because we talked about it. Remember, it was like, this stuff ain't gonna really balance out even with COVID until after really like 2025, 2026. Well, guess what? We're here.
Yep.
Right. We're here now. But guess what? Now we got Tariff Man back in the office. Hey,
Yep.
How they gonna run this next play?
Yeah. Or engineer a recession. Shoot. That we need anyway.
Right. We've been needing to kind of reset for the longest, and we just kept kicking the can in the road, same way they do with these CRs, right? In terms of being able to come up with a solid budget for the economy.
Right.
Well, we figured out that's a whole grift, right? Everybody knows that the CR is just a grift for Congress. Again, I can't make this stuff up. We kind of knew what was going on. We know this, the thieving and the stealing was going on for the longest, right? That's how they're able to line their pockets.
Yep.
Right. US aid, all that stuff, right? And I know it's gonna get political for some people. Again, I'm not making it, political, because again, money is independent. It don't care about a political party. It's trying to figure out where to go, where to go, where to grow. Right. Exactly. What's going on over Dollar Will? See you in the building.
Hey, what's happening? What's happening, man?
What up?
Yeah. Is the brother still here that was on with the energy earlier?
Peace, power, prophecy. Always been a minute, man. Happy New Year, all that good stuff.
No, he dipped off.
Oh, okay, yeah. No, I just I mean, I I have to always I have to do this when I come on with people, just so they know, especially when, like, I'm always hesitant to come on with people like you that have a group and you're training people, because I want to add to I don't want to subtract. You know what I'm saying?
I know where you come from. We come from the old school block.
Yeah.
Say less.
Yeah. So it's like this trading thing been around a long time, and this the major camps, the fundamental investors versus the technical investors. I've been in both. Okay. Right. Today I'm a technical purist. Okay. So why am I here? I'm here because it's like playing poker. You want to know what's in the other hand. You want to know what the other side, what their rationale is leading them to do.
Right.
And what I've experienced is that when the technical people and the fundamental people are saying the same thing, look out. Look out. Okay. The sentiment is going to follow with both those camps. When both those camps agree, thing get ready to rocket. So I'm always checking, because I'm not watching that fundamental data. When I say fundamental data, I'm talking about earnings reports and non-farm payroll, all that stuff. Because in my view, it's all in the charts. Because I'm trading, like I'm looking at currency charts and commodity charts, peak over interest rate, you know, bond rates and stuff like that. So you're gonna see it right there. Because that's what's really running the show. And so the guy that was on earlier, like I said, I applaud his vigor for the technical analysis, but 3 years is not enough time. You will be, there's some humbling that's got to happen.
Yes, sir. And again, because you know me, Dolly, well, I'm like one of the most humble brothers on the planet, man. And I give anybody a platform. And again, you know, and he's just in one of our groups, you know, that we share with other people. And, you know, because, you know, I post LinkedIn to anybody because we having a discussion about markets. So he didn't know I pretty much, I guess, you know, how we move. A lot of our backgrounds now, he just kind of jumped in, you know, head first. You know how that stuff goes.
No, it's good. I think
we've seen people like that, you know, for years. You ain't never.
No, I'm not offended by it. I reckon, like I got, you know, I teach a group too, so I run into this, and I used to be that guy.
Look, we all came. Look, man, y'all know the most Discord day. Man, look at him, bruh.
Right.
It's like fire branded, boys. Look at him.
I tell everybody learning, you know, when people come to me, I tell them, I think, look, I'm not gonna be your last teacher. I'm gonna tell you that right now.
Facts.
You know, you're gonna come. I said, just don't be dogging me out when you get out there and you learn something new. Just remember, I got you to the next step. The next.
That's all it is. The goal is for you to, you know. So I always tell people the greatest thing that a person who provides information is that people take that information that person's trying to disseminate, apply it, and take it much further. It's like the idea that you want your children to be better than you, not that you call somebody your child, your peer, but some people don't have the time, you know, to sit down and devote to it, right? They got a good basis of the infrastructure, you know, the base bones of it, but they need you to come in and add, you know, fiber optic, you know, bring in the 6G. See, that's the great thing about, man, look.
See, he doesn't understand. Like, I've been watching you for a while, so I know that you know both. And I would, if I didn't respect your technical game, I wouldn't even be over here. So, you know, I send my folks over. One of my guys, I think you know him, Iori. He come through. He's in my group, you know. And so I only recommend people. I tell them ignore a lot of this stuff on YouTube, or send it by me, and I let you know if it's going to be helpful relative to what we learning here at this moment, or is it going to be a distraction? And I forward other people, other videos, other content creators, other websites to them, because I'm like, I don't want you to just learn from me either, you know, because I'm a debate with, like, I'm an Elliott Wave theory trader, as you said. Thank you. And so one of the main site is Elliott Wave International. I tell my people I disagree with them. Okay, so I'm gonna say what I say, and you see what they say, and time gonna make one of us right or wrong. And over time, you will figure out which side you want to rock with, or you might come up with your own twist on it and decide you want to go your own way with it. But there's no two traders that trade exactly alike.
That is fact.
It's sort of like those IQ tests that when you, those pattern recognition tests and questions you see on IQ tests, you know, no two people see exactly the same. And so one trading style is going to match your eye better than another style. So in the beginning, nobody knows you. You don't even know you. So in the beginning, you're going to have to learn a lot. And for me, when I started out on the fundamental side, that crack just tells you how long I've been in it. I was purely fundamentals back in 1999 when the dot-com bubble burst. And I had all the fundamental people telling me that I should be happy that I only lost the industry average. I'm like, what? And I'm looking over, seeing the technical people. They were moonwalking.
They were eating because they just chase liquidity. They didn't care which direction.
Yeah, that's right. That's the one thing. They don't cheerlead for either direction. They look, and when we say technical analysis, that's an umbrella term for everybody listening. There's many styles to it. I started out, I think my first one was Gann theory. And but by the time I eventually got my way to Elliott Wave theory around 2007, okay, that changed my life, because I stopped being so much of a zealot in the sense of I was a zealot about Elliott wave theory, but I wasn't a zealot to the point where I said that other technical trading approaches
Right. Well,
are
move or
wrong.
obsolete.
They're not
Right.
wrong because I can see Elliott wave theory. I can see every trading concept inside of it. Like right now, I'm still learning. I'm learning that what's the big one on YouTube? ICT Smart Money. So I'm
Oh
learning
yeah.
some of
But ICT, man.
yeah,
I've been seeing some stuff on that lately because they've been coming at Buddy too.
yeah, they coming at them hard. They coming at them
You
hard.
might have been seeing
Always.
they've been coming at me too. Like
So,
everybody, know what I say? There's no. That's what I love about this dollar wheel, and you can back this up too, because see, you guys been around too, and the moment you feel like you surpass everything and everybody else, it's the
right,
moment when you fall.
right,
Yep.
Because
right,
you're always in a state of learning, because data is not stagnant, it's not
right,
static.
Facts.
It has all the symptoms of something that you've seen before, but it's based upon a whole new different mentality of
right,
new money that's trying to figure out how to manipulate this
right,
tech, this opportunity, this industry. Again, we talk about ain't nothing new underneath the sun. Well, guess what? They ran that play on AI at a time when the market was getting ready to take a real nasty dive. All of a
right.
sudden, no, AI is bigger than life again. Like, dude, we were talking about AI doing ICO days in crypto. One
Yeah.
chain on that was already dealing with AI.
Right.
Not,
On my YouTube channel, I've done two different points because I've been I've been in this version of YouTube since let me say it, I've had a trading channel since like 2017. And I've done like two different, I think around 2017, I did a 100-year analysis of Elliott wave theory using the Dow. And then somewhere around 2021-ish, I did another one. And so now it's time for me to do another one. So and the reason why I got that channel, because you know how people say nobody knew this was going to happen. Nobody knew. I want to be able to say and show and prove, look at what I was saying back at this time. Now, I may not have been right exactly to the point, but the concept of it being a cycle that repeats, that's it's not entirely predictable to the penny, month, day, and year, but it's accurate enough. It's too accurate to ignore.
I'll say this again,
died a long time ago.
Show me somebody that can find time the exact bottom and the exact top. I'll show you a person that's not not of this planet. And I'm saying consistently. Now we're talking about consistently. That's why again, no swipe at our brother Aaron, but like that's a bold statement to make. That everyone can do that at a high level and be 100% consistent. That's like you're saying you got to bet you know what it takes to bet 1,000%. Like seriously.
And look, that's how you're talking to somebody that's only been trading a few years, because that's a rookie. A rookie tries to
no swipe at the brother, but
no. I'm not no swipe. I'm applauding him. I'm applauding him because
I love his energy. I'm saying I'm like that brother gonna be
I love his energy.
Gonna be great or he gonna crash out.
Look, we're trying to change our culture to make our culture understand that the real revolution is right here on these charts. You want to talk about your equality. This way you get it. This is it. There's no greater place of equality here. The revolution is on these charts. There's a wealth transfer happening every day, month, quarter, year, decade.
Yep.
We got to get a part of it.
Hour, minute, second.
That's right. And so when the brother was saying, I ain't gonna say he was saying, I'm just gonna say, the further you go and mature as a trader, you stop looking for the top and the bottom. When you get close and they're technical indicators, when the trend is running out of gas, there's a time to get out the market and sit your greedy butt down. And it takes a lot of butt whoopings. I call it tuition. Okay,
tuition.
You're gonna pay tuition.
That's why we old school, because we know what tuition is in the market. That's look.
So
tuition make a hard head and soft behind.
There you go. A part of what you learn in trading is when not to trade.
Thanks.
It's not
how
when
much
the
money
trade's winning.
you make, it's how much you
That's
keep
right.
losing. How much
Say what's the first one fruit? Don't lose money.
don't lose money.
Or not, lose as little as possible.
Anybody can, get lucky and catch a squeeze, but can you protect it?
Right. But I got like very close friends of mine, man. They don't, you know how we are always people when we get competitive. Somebody don't want to come and learn from you, so they go out there and they get caught up in, not to bash the guy, but it's there's a penny stock king out there.
Oh man,
but he teaches good stuff. But I'm like, he's appealing. I'm like he's appealing to what you think the market is. You think the market is about scanning for hot stocks. It's gonna move. No, all of them gonna move. The thing is to learn price structure and learn asset correlation. That's the game.
Marrying the both.
When you get those two together, hey, people, listen, I'm Dollar Will. Why? Not because it's some cool street name to go by. No, because I follow the U.S. currency, the dollar, as it relates to the interest rate and energy and metals. That is the foundation of capitalism right there. Everything else comes off of that. If you got a keen sense of what the dollar is doing and what energy is, because you cannot run the industrialized world without energy. We talking oil.
I've always said the dollar wheel, it's a commodity market first.
There it is.
It's always been a commodity market first. That was the first market, commodity, bartering. It was product, it was corn, it was potatoes.
And as a
energy, it was coal. It's like,
and as a technical purist, I say, again, we got different, we see things differently. I say news and presidents don't move the markets. The money behind those commodities, money behind those commodities, pick your president. Your president is his job is not to mess it up. These countries have trade agreements going back decades.
Yeah,
they can't whip the market around every 4 years because a new joker comes into the White House. The whole world is imbalanced in a series of dominoes. And if you learn the technical side and you just look at it as a technical purist, you'll see that it all makes sense. In my 100-year analysis, the 2 times I did it, I went through major things like World War I, World War II, World Trade Center, all of that, and showed that nothing in those major events disrupted the pattern that Ralph Nelson Elliott discussed in Elliott Wave theory. The price was already doing that. It's hard for people to fathom something like that because it sounds, a little wacko. But until you see it, you go, whoa. But it does make sense when you think about it, because your commodities have a growing season. Your commodities themselves are subject to supply and demand. We know that humans are basically greedy. When something is in demand, what do? We hoard it. We make the price go up and too fast. And then the people doing the hoarding, they can't sell it fast enough. That when the price hits the top, they start selling it at any price they can get, and that makes the price crater. So the same people that made it go up make it go down. and when you look across assets, you learn how to read your oscillators, your momentum oscillators, you can see, okay, the money is leaving this stock or commodity, but the price is continuing to rise. That's called divergence. Then that's bearish divergence. So then you look and you see on other charts that's in the toilet, you see the momentum oscillators rising, but the price is still falling. At some point, that rising momentum is going to take control of the price. I don't know, brother, if you have an oil chart handy, but if you could, I would love for us to chat up on that, because when that peace broke out, those peace talks broke out with Ukraine, I was telling my group, funny thing happens when it's time to make money, peace break out. So that's really when you see this oil chart, it's going to all make sense to you. They're not going to be killing each other when we are on the way to the oil eclipsing the former high of $147 a barrel. The next Fibonacci level above that is 238. We about to have inflation like you would not believe. Starting the low in these markets, we're gonna hit that. The low in the Nasdaq, we're gonna hit that this week, possibly tomorrow. For you Nasdaq futures traders, keep your eyes pinned to the August 2024 low. We're going to take that low out for you ICT smart money people. We're going to grab the liquidity.
More blocks. We'll find them more blocks. And load the zone.
And May
25th future just real quick. I know it's the fastest one. Can you see my chart?
Yeah. Can you put that to line chart? But before you do, show them that.
Do it. And I want to do this for a moment because I want to go to the monthly because I've been following the monthly for a while. You through where we at on the monthly chart?
Yeah, show them how that spike went down to below zero. That spike, how low that spike went.
Oh yeah. We went negative. We went. Man,
now, don't you feel like yesterday?
We remember that like yesterday, boy. We told that. Whoa.
Don't you feel like an idiot for not pouring a lot of money into that?
We had went negative 40 point on the. It was so bad because you remember because that's why I say we old school. The surplus was so bad. They couldn't give, or they were trying to give barrels
away. Yep.
They were giving it away. Yep. Like, brother, like, man, I wish I had the wherewithal back down. Would have bought me a whole container ship full of and put in the backyard.
Yep, real talk.
Yeah. But
put in the backyard with the pit bulls.
If you see on the right side of the chart, it's been hugging that low on the right, and I think we get ready to go up from this. You got.
You see look on the consolidation line. We right back at a major decade support level. Yeah. It's always in the hub, tried to hover at around that $70, 68 because you remember first Trump, his whole modus operandi was he was trying to keep oil at around $55 a barrel, right? Remember, he's like oil should not be over $6 a barrel, at least under his administration, right? Because he was trying to keep in his mind it was about the manufacturing aspect of reshoring. To get production up, which they need oil, low enough where they can, entice businesses to want to come do business in America or bring businesses back. You need to have low fuel costs, right? To kick off this economic industrial boom again. And it made sense in theory, but you still needed players who were comfortable getting their money elsewhere outside the country to make such a leap of faith and investment, to challenge, to do that. I mean, again, COVID destabilized the game because again he was good at it for a good little moment. Remember, oil was cheap, gas was cheap. I will say this about the first Trump, gas was cheap.
Yeah, but keep in mind the high in oil was back in 2008, so it took that oil correction took what 12 years or more. So we talking several presidents been in and out of the White House while oil was correcting.
Right. So let me go to the line, Chuck. I know you say the line.
So back in 2008. The number one energy at that point was back before 2008. Coal was referred to as king coal.
Yep.
Coal hit its all-time high, and all of the energies came down. Remember when when Chesapeake was sky high? Chesapeake natural gas.
Chesapeake,
it's cratered too. The entire sector crater. Now, when you flip and go look at the U.S. dollar, you'll see, what happened because the dollar took off and start rising, and that's at the period where the dollar did a retrace of a steep decline that it had, and in that period, the U.S. dollar was strong when we traveled in other countries, and it's not a coincidence. That's when we start getting the passport bros. Okay, so I tell them passport bros, you better enjoy because it's coming to a close. All that's gonna be over. We're gonna about a year or so from now, we're gonna look back and go, what happened to the passport, bro? It's all gonna be over because the dollar getting ready to crater and energy is getting ready to go up. So you go to for the people trying to learn, let me put it to you this way. When you go to the gas station, you put gas in your car and you give them US dollars. You just did a currency for commodity trade. And the dollar chart is opposite the energy chart. So the dollar is overdue to crater. And gold so it's energy and metals on one side of the seesaw and the US dollar on the other side of the seesaw. Gold just got out the gate first. What you see
Yeah,
on
but
the gold
gold
chart
had
in the
been
nosebleed
a
section,
massive
that's
distribution
getting
phase
ready
for
to
a long
happen
time.
to energy. The nosebleed prices you see in gold, that's getting ready to happen in energy. The bottom is in. Natural gas and oil are about, get your jig clamping on. Get ready to get your jig clamping on. But they're never gonna tell you that in the news. They're gonna tell you after the price is already up there. That's why you got to study the fundamentals and the technicals, because the news, and I used to work in news by definition is what has already happened.
Yeah, it's already in the price.
Dog news by definition is a freak show. Dog biting man is not news. That happens every day. News is man biting dog. So you can't rely on the news to tell you what's happening, because by its nature, news follows the event. It doesn't precede it. But price information
again, if it's already in the press, it's in the price. You know, that's the whole thing in the markets.
That's
for
right.
a reason. Yeah.
So yeah, you see that wedge in the oil chart you had up there. You put it back on a line chart. You can see that little triangle or wedge. We right at the apex of it now, and so that's why these governments are getting their ducks in a row. That's also what this Brexit thing is about, because during the time that the dollar was rising, the Swiss franc and the euro and the British pound, all those currencies were getting beat to HELL. Okay, now those currencies are getting ready to rise, and it's time to run from the dollar.
I'm coming up now. My
so see,
I
get babbled. Now for the people learning, I know it sounds counterintuitive. The dollar, the normal direction for the US dollar is for it to go down. I know that sounds illogical on the surface, but when you think about it, it's not. That's because when the dollar goes down, energy and lots of commodities go up. The main one is energy. The other one would be like your lumber and things, metals, things that basically go into a house. That's why on the stock shows, economy shows, they're always putting up the housing index and Home Depot and Lowe's, because that's where you go to buy all them commodities. And so when the dollar is going down, that it typically coincides with the price of commodities going up. So when the dollar craters, your home price getting ready to go up, and all your commodities are going to go up, and we're going to have inflation like you would not believe. For anybody that's too young to remember what happened around 2007-ish, when we peaked back then, what had happened was it got so expensive, inflation got so bad, that they shut down the shopping malls, because the store owners in the malls knew that if they had to pass on the markup to you, that they had to pay the truckers to deliver the good to the store, that you would never be able to afford that. So they just told their employees to stay home. It shut down the machine. And that's going to happen again, because oil getting over 147, 238, we can't sustain that long. So the price is going to, I think the price is going to get there pretty quickly. And fortunately, hopefully, it don't stay up there, that we crash it back down. Because nobody can afford that. You're going to have subsidies from the government to help you pay your heat bill.
Yeah, they're trying to definitely suppress it.
So they're gonna kill it. So if you can't, there's a certain limit that you will pay for a thing, no matter what it is. There is a maximum price where you will say, I'm not buying those Jordans for $1,200. I don't care. I ain't doing it. Or whatever it is. It hits a ceiling. And that's getting ready to happen with energy. It's getting ready to happen.
Yeah. I don't know if you've seen the last video we put up, Dollar Wheel, because over Chris put out a video. He had, another gentleman he followed. They're, obviously sneaker collectors and sneaker resellers, and he had made the assertion that a Pokemon card investment provides a better, I guess, investment vehicle than that of basically ETF or a stock equity, right? Or a stock, a stock share, whatever, or it could be anything, ETF or a regular company. And we talked about the value of discretionary spend and how novelty markets, they have their place in the grand scheme when there's a lot of slush, in the system, right? There's a lot of liquidity. Or we measure that by M2 money supply. There's a lot of money circulating in the system. There's a surplus like that. That means people kind of feel like, they're doing pretty well. When there's a contraction of that, i.e., therein lies the idea that there's a kind of level of, inflation may be happening, right? Where there's too many dollars chasing too few goods at this point. You wouldn't have the luxury to go out and buy these novelty-based items, right? Because we know the necessity-based ones are always going to take precedence, i.e., energy, food, things like that. You're not going out, like you said, buying $1,200 Jordans when you know the money about to get tight, especially if you can forecast it in advance. You wouldn't dare be trying to make those rainy day purchases for that. You'll be stocking up on things you need. Again, Three Little Pigs, right? You building your house with bricks and not straws. And just given markets, like, again, I know you're a big Elliott Wave, technical mind, that you can see what we came out of. Again, we talking about using this as a good way to segue into the idea that this tariff issue is nothing new. Again, we've seen this again circa 2018, 2019 under the first scenario. We saw what energy was doing then. We saw what where the dollar was during that time. We saw a lot of things where they were at that time in terms of commodities, emerging markets, what they were looking like, how they were, again, trying to get their feet underneath them. So it was nothing new. Again, we saw, even before, I'm just using it as a case study, again, before we hit COVID, we're talking about, again, energy, right? Because energy is the backbone to any industrialized country, excuse me. It is the precursor to all things, right? You need to have energy to produce infrastructure.
Yeah, to run the factory.
Right.
to make the widgets.
Simple. So
to run your computer.
Facts. All of it. Again, you couldn't make this stuff up. That's why I said we understand that and again, I've always try to make things very clear, at least, bring it down to the point where people who study the certain aspects of the market, again, they have a very in-depth analysis that they can provide to people about, how to look at this particular market over that or the other, or how it runs in concurrent with other aspects of the market, right? You can't have one without the other, essentially, right? The nuts and the bolts behind the market. And tariffs on the Trump the first time, what did it do, right? It cratered, right? It cratered a surging oil market. Again, we talking about, he was, ramping up his rhetoric in 2017. He implemented a lot of those tariffs in 2018. And what did they do to energy then, right? We were sitting at peak oil. We were sitting at $72 a barrel, literally near $73 a barrel during that time. And then we start implementing those tariffs against China, which is the biggest manufacturer on the planet. Look what it did to oil, right? It brought it down, right? We had a massive sell-off in oil down. I remember, like yesterday, we dropped all the way from like 72, 73 all the way down like $44 a barrel, right?
Right.
Again, we was having limit down days in the market during that time. I don't know if you remember that.
Yeah.
It was down 5% in the day. It was like, okay, this is something new. But again, it's nothing new underneath the sun. So we're back here again. There's a lot of other countries out there who are now, upgrade their infrastructure, i.e. their need for fuel, where they're getting it from, how they're utilizing it, whatever, what they're using it for, their use case. And we back at a certain, critical level here. When I say critical, meaning it's at a place that we've seen before here, at least in terms of energy, in terms of oil market. And Trump obviously professing that he's trying to reshore manufacturing. Where if he does that, a couple things have to happen. Number one, they're going to have a few capacity, meaning they're going to have to open a lot of these, refineries, because remember, Biden shut down a lot of refineries post-COVID, and he never brought a lot of them back online. We only had really one working at one point when they were selling oil out of the SPR, Strategic Petroleum Reserve, right? We only had one really working to bring in, to refine fuel for the whole country, which was crazy, right? While he was, selling oil out the back door to China, doing all kind of backdoor deals, it left, the energy infrastructure needed for America to kind of, if it was even think about doing some kind of massive manufacturing, it left it kind of in a hard place. With this new ideal of getting oil down, at least in Trump mind, and kickstarted manufacturing at a high level, which seems to be oxymoronic when you think about it. So, like, how is that possible? Yeah, it's going to take a lot of precursor, I guess, importing of fuel, or at least getting attractive value of fuel. At least the Saudis got to kind of, work in lockstep with him. He's going to have to end this war. That's what he's really trying to do with the war. He's trying to end that war so he can probably really get the price of oil down. But it's just so many things that's on the table right now. And if he's lucky, he'll be able to knock all that stuff out in shorter time frame. If not, yeah, we may be in a place where, oil might be starting to, find a bottom.
No, it's already bottom. I think what he's trying to do, he can't afford for the trading routes to be blocked.
Yeah.
So he can't have no war and nothing going on. Because again, we get ready to make all these countries, it can be us if we trade, trade and invest properly. But he's trying to make money. See, the capitalists have stepped in and say, cut that crap out. Okay, we're about to get this money. That's what it is.
Have to pull a lot of rabbits, out of the hole to make it happen. Because again, just given, where we are as a whole, it can get real, it can get slippery real quick. Just kind of given where the levels at. Just I mean, I'm just looking at this like the oil chart alone. We right back at a
Yeah, I don't know if you use MACD or stochastic or what momentum oscillator.
Yeah, I'm using the quick chart real quick.
If you put them up on that monthly you looking at, you'll be like, whoa, we oversold, man.
I've seen it on my other one. I just ain't got to pull it because my doggone browser keeps crashing.
I got you. But yeah, we at the pretty picture that we like to see when where it says the risk is low. For downside risk is pretty low. And when you look at coal, natural gas, they all look like this. They all look like this. And the hoarding,
they're very parallel. Yep.
The hoarding in 2008 was so over the top that it took us from 2008 to in this area to burn it off. Now, that's the technical response, the non-political technical reaction to it. But irrespective of whichever camp you in, technical or fundamentals, when both sides say time to rise, ain't no more debate. Everybody in the pool. Because if both sides are saying buy, who trying to sell? Ain't nobody left. Everybody's either a fundamental trader or a technical trader. And then both camps say, let's go.
Go. I mean, look at copper. Copper, Dr. Copper. Copper is the bellwether, to any level of a kickoff of industrial boom cycle, if you're to have one, between that and aluminum. But definitely copper has always been the bellwether, again, asset and determining that. Because again, we were just talking about, copper when it bottomed out again.
Because it's got real industrial use. That's the most important metal in the industrial. It's copper.
Yeah.
Copper's in your wire that you plug in for your electricity. That's the conduit.
Yeah. I mean, you just look at this on a max chart here, at least in terms of investing in here. Investing.com has, again, you're looking at where copper's at now. Again, we
that's too many touches at the top. At that resistance at the top, it's too many touches.
Yeah, it's plugging right up at it right now. That's why I say.
My saying that there's no such thing as a triple top.
I don't believe in do here.
I don't believe in triple tops or triple bottoms. You knock on that door a third time, I think it's gonna break.
Yeah, it's gonna have to do something. So they bank on it being a scenario where, again, it has to. It's at a level now where if they're gonna kick off all this so-called, manufacturing boom, this next wave or this next boom cycle of manufacturing, they're gonna need copper to be, they're gonna need the price of copper to work with them at this point.
And I want to go back to something I said earlier. I don't want people to forget. Remember, I talked about that seesaw when the dollar is about to dive. Those things that typically move up when the dollar goes down, those things are used as a hedge against the dollar. So this big money they'll just move out of cash into something that's appreciating just because the dollar is going to fall, for no other reason than that. Because you don't want to go poor just because you got all your everything in cash and the dollar's you losing purchasing power. So you want to protect your purchasing power. You have to find something that's going to go up. So it's a lot of money that's going to roll into these commodities just because of dollar weakness. Now that low right there, what is that? What is that chart you're looking at?
I just went over real quick. Like I was trying to keep my dog thing. It was crashing early, but we good. I think
is that Nasdaq? What was that?
No, this is the futures dollar. This is Dixie.
Okay, Dixie. Gotcha.
Mm-hmm.
So and you got a monthly. Is that a monthly?
Weekly.
Either zoom out or go to a monthly so they can see that big dive.
Okay.
Yeah, I want to see the big dive going. If you can get all the way back to 71 or something, that'd be even better. Just a huge one like that, so they can see that.
Old chart.
That's good. Just so they can see that the current high over here on the right side, there's a higher high on the left side of the chart. So all of this rise since around 2009 or 2011, whatever that low is just a recoil from that big dive we had. It's getting ready to continue. It's getting ready. The dollar,
it's kind of caught in that cycle there.
Yeah, the dollar getting ready to continue. So this is the DXY.
Yeah, the Dixie.
Okay, the Dixie. Yeah, okay. So yeah, the dollar getting ready to die, and the dollar falling again makes money flow to energy, metals, other currencies like the euro. So you're about to see more Europeans and stuff come to America for vacation, but we won't be going to their country. If you remember decades ago, Japanese used to come to America all the time, but we would never go to Japan because our currency wasn't strong enough. But now that's about to flip back that way.
Japanese it's the world's carry trade. You see what their currency been doing lately? They've been blowing up.
Yeah.
They at a point where they can't do the ZERP no more. They can't do ZERP no more. They cannot do ZERP no more. Because ZERP for them has been what they call a layup for American, I guess, ability to exploit the markets in their favor in terms of using, if you will, the Japanese central bank as basically a surrogate central bank for American markets. Right. They suppress because they basically one of the most, if you will, they are the easiest, the most symbiotic market to our market than any other market on the planet. And that's even talking about against Europe. They fall lockstep with American market a lot better than anybody else.
Yeah, that rise, everybody see on this chart from the left to the right, that upswing during that whole time right there. How much time we talking from that low right there move more to the right, more to the right. That low, the lowest point on screen right now.
Oh yeah, we said 71.
That's 71.
Yeah, that was back in 2008 during GFC, Great Financial Crisis, subprime lending crash, when the dollar crashed.
Okay, so that's 1971. Okay.
No, 2008 right here.
That's 2008, right. Yeah. Okay, so from 2008 to the highest point you see on the right, during that time, this is for the people learning. During that time period, so we talking about what's that about? How many years is that? 2008 to the high. When did that high happen?
That was just recent, remember, because it happened right after inflation. They were doing inflation.
What year is that right there?
2022. Yeah.
2022. So we're talking 14 years.
Yep, it happened
in that 14-year period. The euro, the British pound, the Swiss franc, all those currencies were getting destroyed while the dollar was rising. And that's when they start talking about de-dollarization. We don't like this because the dollar is the default currency. So you have to pay your bills. All these countries have to pay their bills in US dollars.
Yeah, so
now you have to trade your falling currency for this one that's rising. So now over time, it takes more of your currency to buy the dollar amount you need to pay your bill. And so that made them, you know, be and moan. Okay. But now, so when the dollar starts falling, all that de-dollarization talk gonna go away, because it's going to start being good for them and bad for us. Which in the bigger trend back since the 1970s and stuff, that's the normal. It's normal for the dollar to go down. So that's why in America they tell you you have to buy a house, because your house is a hedge against the falling dollar. So what you lose in purchasing power, you gain when you sell your house or to get a home equity loan.
Get equity.
Right. So they don't tell us that in school, because you know capitalism is about exploiting labor. They can't have you being intelligent.
They ain't teaching how to fish in school. They will not teach you how to fish.
They're not going to tell you that capitalism don't work if the people are too smart. Fact. They can't have that.
It's the greater food theory. You need someone to yeah, you already know.
That's it, man. So yeah, so we're talking about a big shift for so someone saying earlier, why you need to look at all this? It ain't that deep, it ain't that complicated. You don't need to do all of this. Now that guy's entire 3 years of trading is within this dollar uptrend. So there's one cycle with a certain character, personality that domino throughout all of the different industry groups in the marketplace. When that character changes of what the dollar is doing and the commodities are doing, his trading strategy might not work in that environment. Or if all of a sudden it stopped working, he'll be like, it's been working. Why don't it work anymore? Because the whole price structure shifted.
Cycles.
That's right. That cycle. If you don't know that, you won't know why it don't work now, because things are different now. And what I like about LA wave theory, they begin telling you that price is fractal, that you're dealing with big trends over multiple generations. What's happening today is part of the sequence, what's happening on that monthly and quarterly chart. I know it's hard to believe, but until you actually, I wouldn't have believed it if I had not been a trader during the .com bubble burst. And I saw that the only people who made money were technical traders. When Kramer and all the people on CNBC they stopped bringing the fundamental people, experts on TV. They turned
you couldn't make the correlation of dollar value or market value in relation to the value of all this kind of,
they had to turn to the technical traders. And I said,
right, well, it was about preserving capital at that point. It wasn't about growing capital. So I think that's the greatness of markets, because again, it's a yin and yang,
but both. You know both. Those fundamental traders that don't know the technicals, they're dangerous. I'm sorry. You need to, if you're going to deal with the fundamentals, add the technicals to it. But to ignore the technicals is foolish. You got to know that.
You need both for sure.
Chris. You go over, Chris. You got.
Oh no, I was just saying, if you're gonna be fundamental, you definitely got to be technical.
Right. You can add both. Now I understand, because the business schools, a lot of this stuff started in the university level when they would teach it in as part of like a business degree. And so it's kind of those people in that world have that very analytical mind, which lends them towards the balance sheet way of looking at things.
Valuation is all metric based upon
but once you learn the technicals, you'll see how they fit together, because eventually what the technical people, both sides are eventually going to say the same thing, but their sides are going to have different rationalizations for why it's doing what it's doing. But eventually they're going to say the same thing, because what's going on those charts is going to affect the price of the raw material that business needs to acquire to make their widgets. The price of the tea, the soup, the coffee, or whatever. If you Starbucks, the price of that coffee bean, that's that, and the interest rate to borrow the money to buy the coffee bean That's everything. That's your, on paper, whether you have the prospect of making money based on which direction the coffee bean is trending and what it costs you to borrow the money to get it.
Yeah, coffee been kicking butt, taking names lately too.
Yeah.
That's another one that's
when you
been,
learn all that and put it together, it makes sense. And you can't, it's hard to do that just in 3 years, especially if you're alone. You gotta go through a lot of these stages and camps.
You gotta go through a lot of cycles.
A lot of stuff, man.
And again, I know again, I love his passion, but the moment you say you ain't got a back test, the moment you say you don't have to back test,
that was crazy.
I'm checking out on that one right now because I already know where this conversation is gonna go. I've had this conversation with people like, man, y'all know this stuff. We didn't been in the presence of thousands of people, through our journeys in Discords and Telegram. We've been through so many of these kind of scenarios, and the one thing that a purist would tell you is that you don't get to a place where even when you kind of got some kind of form of mastery, right, like a master's degree, you always revert back to the basics when a lot of your theories are aligned with a certain, if there's any kind of change in the algorithm, the first thing they tell you is to go back to the basics. That's why it's the most purest, piece of advice you can give somebody. When you're struggling with something, you getting writer's block or you hit the wall, go back to your basics, because it's somewhere in the midst of that is where you lost or your calculations is off a little bit, right?
Correct.
Or your adjustment is off. And the basics is always the back testing. I mean, that's old data, historical data that gives you semblance of understanding how you got to the place where you're at today.
That's right.
Basically, the past is a precursor for the future. Right.
I back test on my own stuff, and I have my list of people, fundamental and technical, who I respect, and just to save me from my own BS, I go around and listen to what they saying, and just to see, if they might say something I didn't consider, because you get too deep in your own smelling yourself. So
it's what it is though. That's why people look at like engineers for that regard, right? And the Tony Stark, I always use it because we got this modern value look at things. It's the Tony Stark syndrome, right? And him, being a weapons dealer, and now he hit a point where he feel like he's at the zenith of his weapon making credentials, and he could take, but this next level, new level of ingenuity value that he needs to be to outfit a new type of world or a new threat. Obviously, the ideal of the Iron Man scenario. Again, it's like night and day. You got all these components, but it's a whole different world when you got to outfit, something outside your wheelhouse, right? You have to go back to the base and figure out how to make this applicable. I.e., again, we talking about the ideal of, compute power, AI, right? This ideal of, what does that look like when you attach, again, coding to it that does a lot of what they call inference thought in relation to being able to gather all the historical data. Because basically all AI, what is AI? And its root value, AI is just a collection of old data, confined and compiled into, a little token and can give you, outcome in, real time, as opposed to going through, looking at this citation, this record, it's old data. It's historical query data, and presented to you in an instance. For a layman way of kind of putting it in the perspective. And people pay for data, right? They pay for the value to have compute power, because as the thing goes, right? Time is money. Time is money. AI is time, is money on steroids, essentially, from the base of the coding, the language models that it presents to you in a way where you don't have to do all that tinkering to flush out information or data when you're trying to make a play, right? A major play, an investment or merger, whatever. You're getting all this stuff real time. People pay for that stuff back in the day. That's what the Bloomberg terminal is. The Bloomberg terminal in itself, that's why it's so expensive. It's a collection of data, that you don't have the ability to sit and sift through time and, time and after time and it gives to you in your hand right away, right? But that comes from what? Years and millennia of back testing, data keeping, data record keeping, so to speak. So again, it's the basis of all things. It's a ground level framework. Again, you have to always go, it's always there for a reason.
Hey,
again,
just like our ancestors, that's how they learned about the galaxy. They studied and they took notes and passed it on to future generations.
Again, we go old school. The Dogon, the whole gun. They
you don't build a pyramid in one generation just because you got that's collected wisdom over a long period of time, right?
Think about that, years and years of observation,
right?
To see the gradual change. That's what speciation is, right? Speciation is what gradual change over millennia. We're talking about moving just a centimeter in
right.
Man, you could make. So again, I always say, for us, again, it's exciting because, we're getting a crash course on a lot of things that was somewhat, now I'm not necessarily say it was hidden, but it was kind of suppressed for a long time. In the age of information, all that is moot now. Why? Because you have access to, again, infinite amounts of information. If you have the brain capacity to, to sit through it, right?
Well, you say it was suppressed in the sense that we got to remember there was a long time when businesses had computers and government had computers, and then later we got this thing called the home computer. So computers been around a long time before we got them at home. That's what opened the door when we got the home computer.
Access, again, access is the greatest agency for anybody that want to grow. Having access is tantamount to survival in a lot of ways, right? We talking about beyond the basic necessities of food, clothes, and shelter, energy, whatever. But access is the portal. It's the portal for growth. And again, what makes the market so dynamic, again, just speaking from a place where I know we all are cheerleaders of this industry because we love it for what it provides. The opportunity alone is enough to get you, excited. Again, i.e. going back to the brother that was on, you can see his passion. But again, one thing you will see a lot later when you go through those moments or you going through that sugar high and you hit that proverbial cycle wall, and what worked yesterday don't work today.
Time to crash.
The humbling moment sets in, you recalibrate, and you come at this thing with a whole new different frequency.
And we all been there.
Best of them.
We all been there. That's why
the best of them.
What's the saying? A little bit of knowledge is a dangerous thing. So when you hit one of those change in the cycles and what you were doing doesn't work anymore, that's when you know that you don't know enough.
You will calibrate. Either you're gonna calibrate again. Go back to the old school parables: a hard head make a soft behind. You gotta audible. You're gonna have to audible because again, unless you have the type of thesis like a Buffett, or again, we talk about Benjamin, like again, the Intelligent Investor, again, one of the greatest books ever. Intelligent Investor. Second to that, again, when you start reading things on how to get your psychology right, Douglas, those guys, you got to understand. Again, these people, Jesse Livermore, some of the greats, man. Look, ain't nowhere in the world, unless you got a deep seat kind of mindset. Yourself, look,
even Warren Buffett,
gonna be subjected to having the kind of it ain't just.
Warren Buffett is historic. He's a big part of why I got into it because he said, I was reading him one time and he said trading is the best business ever invented because you don't need no inventory and no employees. I said, there you go. Now, with that said, even Warren Buffett makes mistakes. I remember in my to my group, I called it. He bought Southwest. At the time,
you already know where I was going. I'm not gonna
when oil was going,
airlines keep them all in the teeth.
And I was teaching my group. I said, what do airlines need to run their business? They need jet fuel. They need fuel.
Yep.
And the price of the fuels was rising. I said, that's going to eat into the profits
always
of Southwest, and it's gonna get destroyed. And he took a beating on that, but he's so diversified that he can recover from it. And he did. He's Warren Buffett.
yeah, that was importance of it. Being diversified.
But even he
the other day over Chris with the dollar, with the Pokemon, versus the SP 500, scenario. The ideal of that, what that looks like. That's why diversification is tantamount again to being a good investor. You can't have all your eggs in one basket. It makes no, again, anyone can be lucky.
Exactly. I'm like, man, you can sell that Pokemon box, get a good return on it. But after that, you ain't making no more money. It don't matter if the S&P do 2% a year. I'm still getting capital appreciation, and I'm getting the dividends off of it. So
right.
You made what, $1,000?
We're talking about money that's constantly in fertile soil.
Right.
Everything goes up at a certain point. If it's in the right industry, once they say the rising tide raises all boats, okay, sinks all ships, So it's like, but now we back to the technical. So you and the asset class correlation. You have to be looking, keep your head on a swivel, watching what plays are being made by the big money. And they're looking at all these different asset classes. So I teach my people, don't be no zealot about nothing. Okay. Don't be no zealot about cryptocurrency.
Always stay open-minded.
None of it, because all of it, nothing. The dumbest thing that they tell us is real estate always goes up or gold always goes up. No, the heck it don't.
No.
Gold.
Everything has a cycle.
I am, as of last week, I'm 61 years old. Despite the youth sounding voice. Okay.
Happy Earth Day. Happy belated Earth Day.
Yeah, thank you. OG, man.
Thank you. But back in 1982, gold hit a high at that point. And that's when Run DMC and them was wearing the big Dookie gold chains. I was in the 12th grade at that time, okay? It hit a high. Gold went on a decline that took 26 years to reach back to that level. And when I get in these barbershop arguments, people want to say gold never go down. I was like, you never seen a chart before in your life, and you saying that. Let me show you on this chart. And if you disagree with me
them blanket statements get you in trouble
after
all
what
the
I
time.
show you, you an idiot. You can look at
that was the whole
gold versus the dollar. Look how long it took to break even from that right high right there.
Right.
How long it take you to get your money back?
That was the whole premise I made that video about. When I told him, he was like, I was like, stocks and crypto is basically a better investment and way more lucrative than a Pokemon card or Pokemon box. And he said, false. I was like, my brother, you have no idea. Right. What you just said is foolish.
Right.
Again, that's coming from a place where, again, that's why I used to always make the correlation. I used to use the cat William, a lot of his, colloquial sayings for a reason. That's where he get his hair done at. Because I can assure you, someone across town, like, no, that ain't going to be able to fly. Because, again, just given, the level of, I should say this, the historical data in terms of when any citizenry is in a scenario where they have a lot of surplus, there's a couple of things that had to happen for them to even have that level of access to be able to make such a discretionary spend like that, right? Or a discretionary type of investment. Because again, we're talking about when there's a lot of capital liquidity out there like that anyway. You ain't going out and buying a box of Pokemon cards when your pre-recessionary,
right,
cycles is getting ready to kick in. Unless you have enough, put away in the sense where you're waiting on the market to return again. You know what I'm saying?
That's when I when people come to me with that, Michael, because I get all kinds over my face. And I don't, again, I tell them anything can be traded, but let's look around the different asset classes and we're going to use Elliott wave theory to project the theoretical extension for this next wave. And after we do this, you tell me if you trust Pokemon cards, or do you want to get into this more established thing? Because it's like they teach us that finding the next thing is like finding a needle in a haystack. it's some secret. No, it ain't no secret. You just have to be taught to look at longer stretches of time. Think 10, 20, 30 years and look at asset classes over that time and see. And then, but without something like Elliott wave theory or what's the other one? Wyckoff or something like you need some bigger system that's dealing with big data, something that's dealing with big data that's been around a while. You got to learn those types of things to know, okay, now you take your buy and hold strategy and you put it inside of that strategy.
Yeah.
And when you get to the top,
something
the
similar as a Bollinger
top,
Band,
get out.
a Bollinger Band. That's right. It's understanding those peaks and troughs, those cycles again within that. Because I know you're a big Bollinger Band person too, over Brandon. Again, it's one of the most, again, visual scenarios, the indicators that gives you, again, the idea of being able to track those hard pivots and find those so-called, moments when you're starting to kind of hit those, peak interest or peak outflow or peak inflow cycle. Then you can either backdate, and that's what I love about the market, because again, understanding the technical and fundamentals, and then you can take that same data and you can go, again, run it up against, an order flow chart, right? You run it up against an order flow chart, and the order flow chart saying this why you have all this aggregate, interest sitting at this particular, time and contract. Right. You're at a wall, you're at a resistance, or you're at a support, and the buying of that is giving you 100%, basically a signal that this is why you're here, right? This is exactly why you're here now. Again, you gotta love this stuff for that reason, because again, it really does put you in a driver's seat and makes it such a fascinating, I don't know, maybe if you want to call it for a lot of people who don't do it necessarily for bread and meat, but just a great pastime to understand how all this data work and money and
no,
data
I see freedom in this, man. Itself. I see freedom. I see empowerment in this.
That's exactly what it is.
You can't pass your job unless you own the business. You can't pass that job down to your kids. You can't do that.
You can't do it.
You can pass this knowledge down to them though about how capitalism works. It's criminal to raise people within capitalism and not show them how capital works. And we're not even curious about it. This is what you got to know. And it's going to take a minute. I can't think of anything more important for you to learn. I'm sorry. You get that great job. You went to school, you got your degree, you got that great job. If you don't know what to do with the money you're going to make, you might as well never had it. If you, with this knowledge right here, you can get to where you want to go financially with a $50,000 a year job. You don't have to have a $200,000, $300,000, $500,000 job. You could be the millionaire next door with a regular job like everybody else. You just know how money works, and so you know how to make time and money work for you.
Work in your favor, exactly. Right. That's so true, brother. And again, this is it's a part of the business and what we do, and again, just kind of bring it to the ideal or back to the ideal of what we were talking about with, when volatility hits, be it a tariff, be it a trade war, be it, a disruption in, again, industry, i.e. a deep seek that, upends the idea of the AI trade when they were overly invested, into the idea that NVIDIA had the blueprint properly and only them and them only. They kind of boxed themselves into the ideal of being the oracle of opportunity. And again, that's what makes a market, right? That's the saying goes: the market will figure all the industry out at the end of the day.
Look at what tariffs gets
out the way. People, smart heads will always, prevail in the end, and it will bring the level of, I should say, the level of froth under control, or the level of, lack thereof into perspective, and where you can kind of build around that, so it keeps that balance there. Now we know a lot of it is fueled by a lot of outside hands and things like that, i.e. Governments and this, that, and the third, and what they're doing, and central bankers and all that. But ultimately, in the end, that's why we say we go back to the root. We always say, man, if you want to kind of figure out what's going on in terms of your, your daily life, necessities, you go study the commodity markets. When you want to figure out whether or not, it's a good time to make a power move into what they call these long dated contractual type of investment, you go look at the bond market, right? When you want to figure out what industry has to offer you from a seed level investor coming into the game, and you may have a product or service that you may want to do, incentivize your business with, then you go look at the equity market, right? There's always something always there to outfit your need in terms of how to become, again, a more sanguine, I should say curator of capital, right? But again, it always goes back to, again, the back testing theory. You got to go back and look at those past historical references, those old citations, those old charts, those old, data points of interest that may give you a sense of where we may be in terms of the cycle. That's why they got a term called boom and bust cycles for a reason. If it was just boom, consistently booming only, again, where would we be? Again, you only have a finite, shelf life in terms of your life. You're not going to live, beyond a certain point where you may be at a point where you live your whole life through a certain cycle, and it might have been a down cycle for some particular whatever, right? Or it might have been at a consolidation cycle, but as soon as you pass away, that cycle, breaks out either up or down, right? Again, that's what makes this stuff exciting for that too. And what time we have at this, at least under our, level of management, if you will, it's just up to us to make the best of it, and then pass it on. Again, pay it forward. As the better way to say it is, pay it forward to those next, hands coming into the game. Because again, when we show people stuff like this here, like, man, we've been tinkering with this stuff and at it for a long time, and these are just some of the base stuff that it takes time to get an understanding of what all this look like. To the average person, if I show somebody this right here, again, we it nothing against our brother Aaron, but going back to him, we're gonna close on him. The importance of all this gibberish you see on the screen right here, that ain't by accident, right? That ain't by accident. That's being, again, a student of the game and understanding the importance of why stuff like this is important, right? You have to be familiar with the landscape you're in a way where you can't never fool yourself to think that you at a point where you can accurately say that what's happening tomorrow, 100% certainty, where you don't have to do it. But this, again, it's like the 3-point shooter that shoots from the half court and turns around and walks away before you see if the ball goes in the hole or not. Right? Right? The odds is that, again, the flip of a coin, it's a 50-50, right? Percentage chance. If that coin is balanced properly, meaning from the heads and the tails, right? Meaning even the weight of that coin has to be balanced in a way where it gives you at least a 50-50 chance, right? It can't be heavier on one side than the next, right? Which pulls on the gravity to give you more probability that it's gonna fall on the heavier side, right? It's the fine tuning that gets what I'm getting at here, guys. And I know you guys know it because, again, I know we speak it to the choir in this moment, but it makes it great. Why? Because this is why we do what we do. And when you have moments like what we're dealing with this whole tariff stuff, and and what is that going to do to the markets, and some people who may be new to the game, and needing to make sense of all this, because again, and so again, the brother, when I posted in that one group, he asked, like, what's the use of the tariffs, right? What's this about? It has no basis of need to know anything about this, right? Because I guess, from a technical perspective, yeah, you can probably say that, but from a fundamental perspective, it's another component of understanding why the liquidity the way it is right now, or the volatility is where it's going to be, or where it's going to go. And you being prepared to trade that is based upon understanding all the other noise that you may be tuning off and not knowing about, meaning fundamentals, why it's important. It's an important component or use case. So again, this is why we're big proponents of understanding how to be technical savvy, also how to be fundamentally, present in the moment to understand what's going on around you from a global macro perspective, even the micro perspective of industry. It's important to learn everything you possibly can. Don't cheat yourself from knowing how to be able to fight better, right? It's just important financially, that is. It's just important to realize the importance of that. And you can have mastery in one over the other, but it's always good to also know what's going on the other side of the, other side of the house as well. Again, right hand, left hand, right? And so I think that's just universal for us to, always be, again, always be in grind mode, right? Always be in grind mode. This is just one of many other moments that we've seen before, again, with Trump, at least in terms of the tariff scenario. It's just now it's a somewhat of a moment of reckoning that he couldn't get off the porch his last administration. He's going to he's going to definitely try to get it off now. And this is why they're not trying to run. Yeah, this is why they're not trying to save the stock market too, meaning the new treasury guys, Bessie. Because again, we're up over 40% over the last 4 years, somewhere around there, give or take.
Yeah.
Like, dude, y'all good. We ain't finna be doing this, hot potato game with you guys just because y'all, again, you want this, to keep the party going, right? Again, y'all know Wall Street don't take days off when it comes to the, the sugar high, right? They want their money, they want it fast, they want it, furious. But again, it is what it is. We're gonna love this either way you look at it. Why? Because if it provides the dip buying opportunity that a lot of people was waiting for anyway, welcome it. Let it come down. Again, you talk about, sitting at all-time high no more than about a month and a half ago, somewhere around there, give or take. And it's down now, a little bit under, finally now, with the way that the futures are, we're down finally now around about 10%. Dude, what are you missing? You know what I'm saying? You ain't missing nothing unless you bought the top. You know what I'm saying? If you just bought the top, yeah, of course, you're going to feel some kind of way about it. You're going to call it, scam and fugazi and this is trash. And, we heard it all before. I just heard it all before, right? Dude, you just came in at the top of a cycle possibly, right? Look at the market, what it's been doing. It's just been traversing up to the upside like crazy. Yeah. You know what I'm saying?
That's funny.
Let it happen. Get this opportunity to buy the deal.
There's a guy in the chat. His name is it Brian something. He mentioned deflation. I know we talking inflation. Deflation is coming. It's gonna come after this. That's why. That's back to why you need to read have the technicals then and read the chart so you can see this. It's got to go through this cycle. And when this so at the end of this cycle, we're gonna have a prolonged deflation. It's gonna be ugly.
It's gonna come. Deflation's coming.
You go over, Chris. You got it. Mm-hmm.
Yeah, it's coming. So,
but the bubble hasn't burst yet, and those tariffs are going to be part of what burst the bubble.
Unraveling.
It's going to throw gasoline on the fire. The fire, I'm talking about the cost for your goods and services that the things affected by the tariffs. They're going to cost you more because those businesses, all they know to do is one thing: pass the costs on to you or us, the consumer. Yeah. And at some point, so that's going to make the price. The pain is going to get unbearable sooner, and the bubble, that's going to make the bubble burst. The bubble bursting is when you say, I'm not paying for it. I just go without. And when that happens, that's when the price starts to crater.
Yeah.
There is a point where the technicals and the fundamentals, they do meet and they make sense.
Yeah, they marry. You got to love this, though. Again, anybody who understands long-term money curation or the ideal of what that looks like from a place where if you had a chance to be back during a Buffett, era or Livermore era, you would love to be, 80 years old in the game, or at least 50 plus years in the game of investing.
Right.
Or just, dollar cost averaging. Yeah, of course, that's why the boomers are the greatest. They are the most wealthiest class ever post-industrial revolution in American history as we know it today. Of course, that's going to get surpassed maybe the next 200-300 years, whatever our future generations, may do. But of course, they're in their golden era. Mm-hmm. They were buying houses back during the 40s and the 30s and the 50s for 4,000-5,000% less.
$10,000
what they
for a
are
new house.
today. They're in their golden era. They're at the peak of their what? Their cycle.
An automobile was about $2,000 or $3,000.
Let this man. We talking about those equitable assets that they can pass on now. Brownstones, back in the days, especially in like where I'm at DC. Some of you guys, especially live up north. They was buying them brownstones back then, like 2 or 3 units. They was spending no more than maybe what
DC,
20, 30,000.
I didn't know you were a DMV, brother.
Yeah, I've been here now, about 6, 7 years. We military family. Everybody, I've been in there for.
Oh man, well, I'm not there now. But let's just say from age 6 to about to about 7 or 8 years ago, I'm DMV.
Oh, you was in the yard. You running the yard then.
Yeah, we neighbors.
I'm on weekend warrior passing through. But again, how it is. When you see the historical value in terms of the house and all that kind of stuff like that, because we dealing with gentrification. That's why it's a big topic. A lot of people that were sitting on them old school brownstone, they paid $18,000 for them, $20,000, and now they work over $1 million plus. Like you couldn't make this stuff up.
Here's the sad part. Here's the sad part, though, brother. Because we don't do the technicals or learn asset correlation, how to read a chart, and we have in our mind that real estate always goes up. We're gonna let that thing burst, and we're gonna be sitting in a barbershop saying, "I should have sold when it was this." So because when folks in DC were talking that when they talked that gentrification stuff, I said that's the best thing that could have ever happened to you, because all they did was move to your neighborhood and shoot up your property value.
You gotta make sure that your
I'm like,
problem, you ain't sitting in on adjustable rate mortgage.
They're like, what were you supposed to do? I said, you supposed to sell. That's
sit on it. Yeah, sit on it.
Where am I going to live? Where am I going to live? You live together. Go to your grandma's house, and she needs some help paying her utilities and stuff. You go in and you buy everything from the groceries to the utilities, and everybody huddle up in that one house. Let this market implode. You sitting on cash, and everything is dirt cheap, and then you roll out and buy wherever you want, whatever.
Everything kind of goes back when it goes through the other way. It goes the other way. Again, it's the greatness of understanding why this stuff is so important. And again, in closing, guys, I got to get out of here a little bit here. But I will say this again: this ain't nothing new on that we haven't seen before. You should welcome downturns in the market. I know it sucks to say that from a place. If you coming in as a new investor and you've been buying a lot of the market readily based upon all this potential growth, right? The idea of this AI revolution and this, that, and the third. And as soon as you start seeing things that kind of chip at that armor, or that chink, there's a chink in that armor in terms of there's, the market figured out a way to, to reverse engineer that. Again, it's going to happen at some point anyway. It was already destined to happen. It was just how long they can keep that punch bowl going around, and everybody can eat off of it before they figure out that industry has gotten smart and figured out how to make it cheaper or more efficient. That's what capitalism is supposed to be about, at least from the Austrian school of law, right? Because y'all know there's 2 economic schools, right? It's Keynesian and Austrian. Yeah. Well, we've been riding this Keynesian market, theory for well over, at least there now. If you look at it again, going back to the Great Financial Crisis, even post 9/11, we've been riding that way so long, where government has overreached, its capacity, or in a way that we are dealing with government now, which we figured out all the fraud that was going to be rife from it. When you get too many people hands in the cookie jar, again, we're bound to hit some kind of form of a wall, right? Because you can only, do that for so long. Again, money supplies and interest rates being at ZERP for forever. Like, that's not running an efficient business, right? You can't, rob Peter to pay Paul. Eventually, you're going to have to be able to figure out how to produce something to balance out all that potential debt that you kind of accumulated, and kind of try to offload to someone else. All right. And we're just here again, guys. You got to love the idea that let this happen in a way where you're going to get a chance again to get you some good dollar cost averaging moments in now. Yep. Right. Let it happen, guys. You got to welcome it, because when they weren't giving you a chance to get in, what was you doing? You was getting FOMO'd in, to break your rules to buy and chase when you shouldn't have anyway. And that's what makes it crazy, because again, the person who's just coming in learning, I'm not gonna really, it's not a swipe at a person who's learning, but again, they was chasing all this up here, this 576, this 5. They was like, man, this to keep going up, I ain't gonna never get a chance to buy. Well, guess what? Now you get a chance to get it at a better price. Now it's coming back down to some respectable level. And we still talking about the market is overbought. We still talking about PEs being extended beyond their historical norm. And in relation to the level of productivity that you need to have within your economy to make that, valuation warranted, if you will. Again, we're on the cusp of stagflation. Now, some would say we're already dealing with stagflation. I would probably say we're definitely in a soft stagflation right now. All right. And that's before we talk about all the stuff that's happening in Washington, D.C. right now with them taking the wrecking ball to all these people's jobs, right? Again, the level of production is not there. We've been heavily reliant on government GDP subsidy going on now since 2008. Let me repeat that. Government subsidy is what? Government producing all the natural growth. Well, I'm not going to call it not natural growth. It's GMO growth.
Yeah.
Right. Organic growth is small businesses.
Like a drunken
Russell eating. You see what I'm saying? Equitable distribution of the wealth that your country produces within the GDP, that is aggregate to everybody getting a chance to eat, not just a small sector of your society, right? Which government overran itself by being in this case, the harbinger of delineating, or in this case, regulating who gets to eat, right? All this oversight and red tape and EPA and this and that, slowing up contracts and sitting on contracts, and y'all know what it is. Again, I know I'm preaching choir, but I'm just making this observation. When you hear the word tariffs, as destructive as it could be, it may be a gift in its own right, because it's giving the market a chance to realign itself. It may not last no more than 2 years. It may not last no more than 4 if a new regime come in. But for the time being, it's giving the market a chance to reset itself a little bit. We're not even in correction territory, guys. That's what's crazy. We're only down now. We're around a little bit after under 10% as of today, as of tonight at least, with the futures being down, because we finally broke the yearly lows, right? Yep. At least in this case, if you think about a 52-week chart, here it is. We're in the month of March, or basically, April. I would say we're in April. Where were we back in April of last year? April of last year, the high of April of last year, we were sitting at maybe at around 525. You remember the other day on the live stream over Chris, I said, man, I'm waiting for that 530 area, 525, 30 area.
Mm-hmm. Right by saying that.
Right. We're talking about basically a good, retracement at a point where we broke out from around that same area. Keep in mind, this is a test. Breakout came back, we came back and retest. So that's your back test right there on the pullback into August, basically of last year. And we come anywhere back around that area, then you get my attention. We still got some gaps down there that still may get filled, right? It may happen. I would love for it. This 510 area, if we fortunate, if we just get so lucky. Does that mean all that Facebook, that Meta stuff, that NVIDIA, all this is gonna come down to them valuations gonna have to kind of reassess or realign themselves. So maybe this tariff stuff is again, it's a gift within its curse perspective of those who are buying the top. You get a chance to dollar cost average now and get you some more better fair prices. Don't look at it as a bad thing in terms of the market perspective. Now it may feel different on the Main Street side of things, because again, you talk about paying, higher prices in some aspects of your goods that you may need, especially coming on a post-inflationary environment that we were dealing with. However, again, there's ebbs and flows in that. Again, just looking at the energy landscape now, gas is getting a little bit cheaper now. We don't know how long it's going to last, but we'll take it for what we got for now. If they're able to pull off what they're trying to do with that, we'll see. If not, oil going to break out and we're going to be in a world of trouble. That's when we know inflation is going to have to go completely crazy, because the biggest component of inflation is what? Your energy costs. That's why they strip it out of the the CPI for a reason, especially the PCE, right? The Fed's scared of it because it pretty much pulled the sheet back on all the fake wizardry that they're doing at the Federal Reserve.
Yep.
You couldn't make this stuff up. That's why I always say, if you want to know what the real market looks like, go follow the commodity market. Again, Dollar Will spoke to that tonight profusely. You guys already know this stuff. You go look at the commodity market. It's going to tell you what's going on. How's the market? Go look at lumber. Go look at steel. Go look at copper. That lets you know if you're in a fruitful ground for what? The housing market booming cycles. So it's a lot of things that you can do organically to understand how to be a very proficient, a buyer of markets. Again, you want to trade the market, that's fine too. Again, you're going to have to respect the value of being a good, curator of fundamental analysis and also that of the technicals. Right? Yep. It just helps. It really does help. And so again, I just want to leave you guys with that. Ain't nothing new that you guys haven't witnessed before. Again, this is just circa 2018, 2019 again. We already dealt with this tariff thing before. We know what it did to the markets then. Again, we will be so fortunate to have those kind of market, algorithms that we, had back then. Because what were we getting back during that time? We were getting pure limit down days in the market. Market dropping 5% in a day. You know how much money that looks like on an option trade? Again, we spoke about that. Chris, you spoke about that doing your Pokemon, index case study. That's in a day. People, we talking about $100,000 days for a lot of people that were, using big liquidity. They were making that on the limit down days. I watched Van Winkle in Black Box Discord. He made thing there one trade after hour when the market was limited down here. I think he cashed out over like a $200,000 trade in a matter of less than 30 minutes.
Boy,
like this kind of stuff. I'm like sitting there like, dude, how y'all finna convince me that there's something else out there better than this?
Pokemon card. Come on, man.
I'm like, bro.
I
got screenshots of that trade to this day, man. I remember like yesterday. I'm like, okay, that's all I need to say. I was like, oh man, look, okay.
Yeah. So a job too, right?
Yep. I was gonna say, so you rather have a job than this,
man.
Both. Both. Look, get that company money on your 401k.
I'm not knocking the 9 to 5,
but Friday, but you come in with that rent money. You really show that rent money.
But shit, I got to find out where you can make somebody's salary in a year, man.
We're gonna sell some frozen cups on the weekend. Look at I'm gonna go day trade.
All of the above. It's like the guy we talking about trading versus investing. Day trading. If you can master it, that can replace a paycheck every week or two.
Primary income. It can be supplemental, and you can turn it into your primary income. You can make somebody's salary in a damn day.
Right. It takes. But y'all know what it takes to get there, though. No one gets.
Yeah, I think
there is no finite blueprint where you just jump in the game tomorrow and make those kind of level of,
No, it don't work like that.
It just doesn't work that way. So again, that's why we're very cautious about what we say and how we say it, because there's always somebody out there waiting to take information, and they process is totally different than ours because they don't understand what we've gone through to get to certain places where we're still on this road, this journey. People will soundbite clip you to death.
Yeah,
and they're wrong with it. Like, bro, you said like no.
It's context. Gotta have
always context.
Yeah.
So
you can
that's
get
why
lucky.
We're very careful what we say and how we say.
You still need to know what you're doing. Still.
Yeah, I'm a fan of paper trading, but for some people that doesn't keep them engaged enough. And for those people, I steer them to the prop trading. Get a cheap evaluation. It costs you maybe $15 a month, and that $15 is enough to create a psychological connection to it, where you'll fight to get your money's worth, or to try to get your money back. But you don't want to go out here when you learn.
It's like a fire testing scenario. You got to go through the fire a little bit.
You don't want to, but you don't want to go out here with a little bit of knowledge and start trading real money. I don't. Don't pay that tuition. Yeah, do not pay that tuition because you're gonna lose
the tuition you want to pay right there.
Yeah, you're gonna lose a long time before you learn to win.
Hell yeah.
So, trust me, I done paid enough tuition. I'm still paying tuition today.
Then put some kids in college. A couple of y'all single folk got to put
even the law.
A couple of what they call ex baby mothers. Should have been baby mothers through college. She didn't get pregnant or you.
I'm like, man, I done lost more money than you made already. So, in your 3 years and then my time frame, I done lost more money than you made. So you can't come on here with, a little bit of knowledge and try to, act like you got something special and new. And I'm just like, bro, this is nothing new. This is, stuff I already been through. You talking to my teacher right now. My teacher is on this call. This is his YouTube. This is his show. And you trying to talk to my teacher about something he done taught me and other people that's, on this channel. So, no, man, we know this already. Matter of fact,
we're students of the game. And that's why we come from a place where we're always humbled about realizing the power of your peer, right? The value of having a good ability, because as the saying goes, steel sharpens steel, iron sharpens iron. You're always constantly in a mode of, you're gonna always, witness something. The more you tinker, the more you dig, the more information reveals itself to you, or more data, or the way your intellect obviously will be able to receive new data is because you're constantly being humbled by something that you missed previously, right? Like, I wish I knew that then. Again, the hindsight trade is the best trade model on the planet, is it not?
Yeah, that's it.
If I knew what I knew then, I would be this, right? You do that all the time.
Right.
But guess what that is, guys? That's useful data, though. That's what the back testing perspective is, right? The theory of back testing is just that. You're going back, you're seeing patterns, you're seeing trends, you're seeing semblance, you're seeing things that have happened at a point where if it was a volume, if it was the MAC, if it was the, if it was anything, it's a clue to now. If you see something close to that again, Elliott Wave's perspective, you're seeing how important all those different intricate things come together and form Voltron, right? Yeah. Again, y'all know the matrix. When everything slows down, like, bro, I see what's going on. I see what the market maker's doing. I see what the order flow chart showing me. I see, where we at in terms of a liquidity wall, or what this order block set up, what it's looking like, right? That's what makes this stuff, what it is. That's why we get up every day excited about the opportunity that it affords us. And you could be doing a myriad of other things in your life every day too. But at the end of the day, you still got a good fallback to. You got this as well, right? Hey, I say it again. You was alluding to it over Brandon. Like, man, look, what else? Look, ain't nothing. Look, all right. I know I'm preaching to the choir, but y'all know what it is. And it's getting ready to get back to the moments again where the soil started to get fertile. Let it happen. Again, look at the pullback here again in closing here. We were sitting at around about 613. Now we down about 540. We finally broke some some nice little, support levels recently here. Yep. Right? We under that 550. Let it happen.
Yep. That's how you do it. Be patient. It's the scripture in the Bible. It's the scripture in the Bible that say, though it tarry, wait for it.
Right. Right. You out there tarrying and not being you out there tarrying. You just stupid. Sit still, you got $1 in your pocket, burn a hole in your pocket.
Yeah.
Hey, Obey, question for you. For this particular trade right now, if you was going to do an option swing to the downside, what is your DTE looking like? Like, what are you doing? Like a year out, or would you do 30-day for something like this to cook?
Yeah, I mean, again, just kind of giving understanding where we came back. Look at the again. I was brushed through it earlier when I didn't really go into depth because I was moving just kind of speak about the tariff thing. But if you just think about because the order flow chart is tantamount to, man, you getting real time data, because we know a lot of the market liquidity of late has been driven by what? The options market. It used to be a lot of the CTAs, well, they still are. Of course, they're the big boys, but ultimately you're getting all this zero DTE energy. It got these market whips on all over the place. That's the reason why Tesla dropped doing this, but delivering them today all the way to 525, and it was sitting at dang near 580, 280, going to the bell. Make it make sense. Like who's buying all that bad fundamental data, and you knowing that's going to be a thorn in the earnings coming up? Why would you buy that unless you feel like there's green shoots of opportunity in Tesla that's not priced into that stock?
Right.
You see what I'm saying? That's liquidity crazed, sugar high minded, meme stock traders who have yet to witness what real cycles look like in terms of downturn, and they're just being privy to the idea that it worked yesterday, it should work today.
Yep.
And they're just buying with blindfolds on, saying this is great, this is fine. Again, Elon, this, that, and the third. And we're saying, okay, well, what is the option market saying? The option market saying one thing, the analysts are saying another, and here you is caught in the middle saying, I'm taking everything what everybody's saying with a grain of salt, or not even think about it at all. I'm just gonna buy because it's Tesla. Right? Yeah. So again, you just looking at this stuff and saying, okay, well, if you think about where we at in terms of Tesla, real quick, because I got to get out of here real quick. We're gonna do this again too, real soon. We're gonna start times again, make that effort to get on. But look here real quick, and just use the daily. We'll use the daily chart. Even though I would, no matter of fact, let's lose the weekly, because that perspective really kicks in terms of Tesla on this weekly here, right? Well, you got the election bump, and the only reason Tesla went up on the earnings during the election because of what? He aligned himself with what? Trump. There was no fundamental difference in terms of Tesla books. Yeah, it was, matter of fact, it was looking grim for him. Why? Because we know that. Guess what capitalism did? It produced another competitor that's kicking Tesla in the teeth. The only advantage Tesla got is that particular competitor cannot sell their vehicles on American land. Yeah. BYD. But guess what? They went and found them some new folk in Europe. They started selling BYD vehicles all through Europe and everywhere else now. That's a Buffett stock too. That's a Buffett player. Buffett been in that thing he was in it way back during the I think I want to say the summer or somewhere around there, or 23 or 22. Yeah. Somewhere around there, 23, 22, he bought that BYD, bought shares in it. He's just been sitting in it, riding it. Because again, we talking about wisdom here. The man looks at the market and says, look, this company here, they got all the infrastructure they need. They got all the resources they need to be able to produce what they're doing at less scale, less CapEx, and be successful with it because they're at the cutting edge of the technology that's necessary for this, new wave of so-called ingenuity to kick off in terms of clean energy initiative, right? Because that was the whole clean energy initiative that Biden was so giddy about, right? We didn't see it come to fruition in America, apparently, because they were too busy grifting off the money. That's another conversation for another day. It went out the back door. It didn't build nothing here, right? It turned out, well, that money went. I'm just asking for a friend. All right, it went to Intel that did nothing with it. So again, that's wisdom kicking in. So guess what? Tesla was just riding the hype of the opportunity within that, that space. So the material change to Tesla, even though it's been growing in aggregate value on a compound annuity growth rate perspective, but however, it's starting to tell off. Why? Because it's hitting saturation, at least in the terms of the ability to be subsidized by government, because they were feeding off the tax credits, right? And that was starting to go away, even though it was still kind of slightly there, but it had kind of reached this peak perspective of what they can milk off of that from a profit margin perspective. Then it came down, well, y'all gonna have to actually produce now, right? You got to sell some car. Are you not a car company? Oh no, we know we did stuff. We more than that. We're an AI company now. Now they're an AI company, obviously, because of the Optimus robot. Yes, it has potential. Again, talk about duration. Again, not sticking to what you asked me about, over Brandon. If you look at the Tesla, it's the greatest stock, the trade. more so than it is unless you just a really early round investor back in the days when we talk about before. Case in point, doing the income Kathy Woods and ARK investment, I guess fuel to the fire that gave Tesla really its lift off. I even go a step further. Ron Barron, y'all know who Ron Barron is, right? Ron Barron, one of the earliest investors in what? Tesla, right? He one of the biggest silent bulls of Tesla that a lot of people don't know about. He come on every now and then on CNBC, maybe Bloomberg. He'll speak about the greatness of Tesla, and he go off somewhere and chill, right? That's old money, though. Cathy Wood gave it the hype that it really so-called needed with the meme craze folks, right? The meme coin craze folks. Yep. Again, COVID gave it a new life. The chart is a day trader's land. Look, it's a gold rush when it comes to trading. If you don't believe me, look at the weekly candles. If a person who understands liquidity looks at Tesla chart and the weekly candles and said, man, that is a gold mine of opportunity to trade if you're a day trader.
Coming in, coming out.
Go ahead, over.
No, I'm just saying it's coming in, coming out. If this is a weekly.
Yeah, look at the money on the look. That's one weekly candle right here. Again, just using the recent. Look at the one here in October, right? This whole weekly candle here on November. Look at the size of that green candle.
Yeah, it's probably going to bottom this week
in that type of trade.
It's probably going to bottom this week, and then when it starts rolling north, it ain't going to mess around.
Again, given if everything works in this way, because it's still going through the territory. But I'm just using it as a case study to say,
right,
when these cycles happen, when it kind of went up and did this latest, Trump bump. That's what they call it, the Trump bump in Tesla. Now he got his own internal problems on the PR level because of his political views. This pullback that you got now, back down from over, it went up above 440 or 450. It's just back down to what, 250 now. It's back to the place where it was consolidating this distribution level before it broke out before.
Yeah.
So you got to look at it from, okay, well, does it have some more move to the downside? Potentially, yes. Why? Because they got earnings coming up and the delivery numbers are what? Well, garbage today. And it still rallied on bad delivery numbers today. Why?
Well, they said it rallied because he was supposedly leaving the political office. Yeah.
I'm happy you brought it up. Did you know that was the biggest grift of all time today?
Biggest grift.
It was the big, if y'all know Elon, y'all know that's what he do. They pay people to manufacture what? Volatility for them.
That looks good right there. When you touching it, that might be the bottom. I'm at to study this some more. That might be the bottom.
I'll be right back. Y'all keep talking. I'll be right back. Let me run.
Yeah.
No, he's not giving up no type of power anytime soon. Like you see how he is right now with his company, then all of a sudden, alongside with Trump and all this other stuff, he's not giving up nothing.
So Brandon and Chris, what are y'all looking at in terms of trades? What are you eyeing for a rebound?
I'm looking right now. If you type in Dollar General,
okay.
It said, I believe last time I looked at it, was like at 89. I think it was like 89.93. It dipped down today, went down to like 89.63 something after hours. So that's what I'm looking at. I'm looking if it crosses 90 sometime this week or next week, I'm gonna get a couple options in that.
Okay, and I'm looking at a monthly on it. Yeah, it's nice.
You see that like towards the end, it's almost like an upward trend.
Yeah. I'm wondering if that low got to be retested though. Let me see. Weekly, but I like. It does look like it's like it's beating out. It's beating down. This is the time to be looking to try to aim and when to get in it because it's looking nice in terms of.
You see that gap down on that left hand side. So this is what you guys were pretty much talking earlier today. The previous.
See, Dollar General, like Walmart took a beating too. So what with Dollar General being basically in the same industry group, a lot of those are going to be on, a good time to buy it.
Yeah, same thing. Same thing as BJ.
I'm looking at Nike too. Nike been getting his ass kicked for a long time.
Man, I'm looking at it's just a weekly chart of Walmart. Man, it's oversold on the stochastic. It ain't been oversold like that. Last time it was oversold was in December of 2023. Okay, so it's screaming.
Yeah,
It's screaming. You know, but now I'm looking at natural gas. It's the ugliest chart out there. It's probably it's risky. It's a leveraged ETF.
yeah,
It's Boil, BOIL.
yeah,
Man,
yeah,
that thing looks ugly until you zoom in over like the last few months. It's out the dirt. It's ready to run, and the MACD recovered. MACD is all the way getting ready to cross the center line. So you see that happen on a big time frame, like a monthly or weekly chart. That thing getting ready to run. So it doesn't cross that until it usually happens like after a very long decline when it was beaten in the dirt. And so that's that. It's like that's the leveraged ETF view of the decline in energy. So with that's a 2x
yeah,
ETF. So it has fallen twice the rate that the commodity fell. So it's gonna look ugly.
yeah,
But when you zoom in on it down at the bottom, you go, this thing trying to recover.
yeah.
Yeah, no,
So that's
got
gonna
the
and the price is going to get so high. I don't think they're going to do any reverse splits or anything to make it look affordable, because you know how we get something costs more than $100. We don't, regular working class folks, they don't want to buy it. They say it's too expensive.
Mm-hmm.
We would rather have 5 shares of something of 20 that costs $20 a share than 1 share of something that costs 100. I'm like, it's the same thing.
right.
Same thing.
But they play these mind games because they know by how they price the stock who's gonna buy it.
Mm-hmm. Yeah.
So they use our psychology against us. We're gonna go looking for all these difficult things to buy when the obvious one is right there. They know that we're gonna think that $40 is high.
Mm-hmm.
Once they get to 50, we just won't buy it at all.
Right.
I mean 100 gets to 100, we just not gonna buy it at all.
That's crazy because they're gonna spend $100 on something frivolous.
Right. I'm like, go on and get that 1 share of a great stock that's got a long way to travel before it hits any real resistance. Go on and buy that 1 share of that. Don't worry about getting no 10 shares of something else that's garbage.
Right.
Pokemon.
And like a lot of people don't understand, like what if that thing does a split? That's more capital in your pocket.
Yep.
I mean, you
what
can.
stock y'all talking about?
Deck, man.
What stock is that?
Oh no, we was just saying like regular working class people, they won't buy like $100 stock. They'll get like a $20 stock and buy 5 shares.
Oh, okay. Yeah, they trying to do that. Yeah.
Look at Boyle. Why you look at
more
Boyle?
is more in that perspective. And I understand at least the ideal of growth potential, right? Again, another lesson in itself in terms of understanding growth value and what legacy.
Right.
And,
So like they can lock out certain classes of people just by making it cost a certain price. Because they know our psychology is not gonna buy it.
It's not. It's the penny candy theory. It's 100% correct. And again, you're looking at that now with a lot of these. Well, we went through that with that the post-COVID ICO scenario where you had companies like Frog and Snow and them early investors got locked everybody out through those direct listings. And now you got these kind of pure IPOs coming back into the fray because again, a lot of that kind of seed capital money is more spread out now with all these early round investors that you can do from the common folk level without having those, license that you need, reg license that you need. It has changed the game a little bit, right? I.e., again, CoreWeave, finally came public. It was waiting. Now you got others in the pipeline like Kraken. Y'all know Kraken coming. Klarna, the other buy now pay later company like Affirm. They getting ready to go public here shortly. So, even with that, talking about the idea of at least from a money perspective, where we at in terms of the industry now, because the industry is blown wide open with this whole AI thing, right? It's an efficiency tool, so to speak, to now make a lot of these companies have more, I don't know, maybe viability in terms of how they run their company more efficient. The idea of what we thought about in terms of the blockchain. Let me just put it that way. Like, blockchain was revolutionary. Why? Because again, it's the ultimate ledger of data keeping, right? It's immutable, it's finite, you can't tinker with it, you can't destroy it, right? It's an algorithm. It's like a fine piece of watch or craftsmanship of a nice watch, right? Where just so many intricate parts that make it, number one, the stability of it, the durability value of it, the craftsmanship alone is built in a way where you can't really mess up this opportunity, to work efficient. Well, that's what you got now with this AI scenario, where I think, at least in terms of industry, where we were kind of at a lull in terms of what was going to be the next big catalyst industry of change, beyond kind of sharpening the steel of some of the older players, like your real estate type of scenarios, and because everything comes down to basic efficiency, right? That's what makes any C-suite relevant, is how well they're able to take investors' money, these stakeholders, and streamline their businesses in a way where they're talking about either growth or just maintaining a level of income to the point where they start offering a dividend, where it doesn't really take a lot away from the stakeholder in terms of putting them at a lot of adverse risk, right? Where they can reap the benefits of, a potential, downturn into the next big thing below, or just growing the company where you got good, clientele, where you can kind of keep that beat, keep the beat rolling, so to speak. That's why you got companies like Tesla. If I was just to kind of give a 30,000 view, given how, I was around in the beginning with Tesla and seeing how it kind of went through its scale, and I've, bought and sold Tesla now at least twice in terms that what gets to be trough to peak levels, and been fortunate to do so. Is the trade over? Clearly not. Why? Because again, the brand recognition alone, with Elon and what he's trying to do, at least when you think about his other, companies like SpaceX, right? Because let's be clear, SpaceX is the darling company of Tesla, or I should say this way, of Elon, right? But they know they liken SpaceX to Tesla, right? Because anything SpaceX did that was good when it was first getting off the ground with this kind of test launches and stuff, Tesla stock, was obviously in the crosshair whether it was successful or not, right? If the ship blew up, the stock crashed, right? If it did good, what it's supposed to do, the stock rallied off of it, right? Two different companies though, mind you, but it's still associated with the Tesla brand. Now Tesla's or Elon is into what? The AI thing, right? He had this feud with Sam, buddy from OpenAI. He had his words about the idea that if they don't put a lid on AI, or at least control it in a way it could be detrimental to so-called sentient beings, all this stuff. But that's his next biggest thing though, but his AI model, right? Because y'all know what just happened recently with the brand X, right? What did they do? They literally, his AI brand of the company, or whatever the value that is, they basically did what they call a in-house buying of their brand, right? They bought Twitter bought the XAI, right, through an all stock deal. So it's basically, he consumed all of his, that deal of the lion's share of that particular company. He kept it in-house to keep having controlling interest of the company. Since that's why he did that, right? In my opinion, that's why he made that power move. Because he's trying to roll out the Grok, this whole thing with the Grok that he got, his little AI language model. So he's busy, and in the same breath, he's distracted. So Tesla has an efficiency issue. right? We know about, the level of ingenuity within the cars need to be refined. It can be so much better than they are, but for Elon, he at the end of the day, you can tell he's not really concerned about that now. He's at a point in his life now where he's trying to get into his philanthropic bag, but it's still a little too early.
Yeah.
Because he really hasn't cemented himself, at least in terms of what they feel like Tesla should and could be, based upon the stakeholders who really took a lot of big, faith in him with that. Like they want to see him really complete that to the end before he go and do other things. Well, then he'll say, "What, guys? I was the one that kind of got PayPal up and running to this day, right? He was one of the early, minds in PayPal. But again, you only, again, reputable as your latest venture, right? It's like, like the day trade theory. You're only as good as your last trade you made, right? You got to still line up the next day and put the pads on, your helmet on, go out there and compete the next day. So I think that's what's going on with Tesla now. And again, I know that's kind of a roundabout way to speak about the stock here in terms of potential opportunity where it's going. But again, just given the levels where it is, when you had that kind of level of a pullback, y'all know as well as I know. A lot of some of this is self-inflicted, but a lot of it is what we already knew in the beginning. Anyway, Tesla is highly overvalued. But guess what? Value ain't never been an issue with growth stocks when there's a lot of further money in the markets, because it's a rising tide to lift all boats. The Mag 7 scenario was based upon a lot of everybody kind of, sharing in up the lion's share of the opportunity of all these, this growth pool, if you will, of stocks that had the ability to break out at any moment based upon their next big breakthrough, if you will. Tesla just at this moment now where it has to put up and shut up. It went through it before it became profitable. Y'all remember that, right? Back in 2017, 2018, it was cheating on the edge of being profitable, and they had a reason to really doubt Elon, right? Because he kept making all of these assertions that they were going to do this and do that, and he never felt, completed what he said he was going to do. It took a lot longer than what they kept giving him credit, time to kind of produce. Well, guess what? Now he's not being able to really get that level of cushion anymore, because his political views have gotten in the way of his engineering mind, if you will, right? When he was hungry, right? Again, the Tony Stark theory, right? He was building all these missiles. He wanted to do something else and whatever. So I think he's excited. He's definitely excited about this XAI because he want to compete against Sam Altman and OpenAI guys. He already know he has the greatest layup with SpaceX, because guess what? He get that loan money, right? He get that church deacon money through SpaceX. Well, what is the church deacon money? He get that government money, right? They get that 501c3 type money, right? That grant money, right? Don't really show up with that rent money. That check always gonna be there, especially the latest feat with bringing them astronauts home from space. You know what that did to the SpaceX brand? Mad as people is about Elon because it's politics, at the end of the day, that's the most American thing you can ever produce. The optics of that alone makes him like he's like, yeah, he's up there with the Wright brothers now, to a degree. At least on the modern era.
Yeah.
Because when the last time we went to the moon? All right, well, if there's anybody willing to give that shot to a chance to, guess who it'll be? It'll be him now.
Yep.
Because he went and brought proverbial Americans that were lost in space. He went up there and got them and brought them home. Now, they would just sit up there in Earth lower orbit. Now, if you know anything about space, it ain't like they just outside of Earth orbit. They in the lower Earth orbit, which makes all the satellites, all that stuff hang out at. It just, to us, it's still space, though. But technically, they ain't really went outside what they call the crash out zone, right?
Yeah.
You get above that crash out zone, you on your own, right?
What's that troposphere?
Yeah, that's when again the ability to traverse to the moon. You got to cross over that threshold, right, out of lower orbit. Then you can say you about that life. Until you can do that, that's why ain't nobody tried it since then.
Right.
Whether that even happened or not, because it's still a lot of that's still up for debate. Do we really go, right? I ain't trying to get into conspiracy theory, but there's a lot of again, age of information poke hole in a lot of old things that were said and it can't be produced again. So you're gonna mean to tell me that the technology we have today is not capable to get us to the moon when we had rickety stuff back then? Make it make sense. All this AI, all this efficiency, all this mathematical computation, and
that's a good question.
Exact science.
Especially considering our ego. Why would yeah.
It was filmed.
Again,
it was all
y'all
filmed.
smart enough to know this stuff. Y'all, this ain't nothing that we all haven't pondered or twiddled our thumbs and say, well, how is this? Again, it's the idea of the dinosaurs doing biblical times. Like, how you got dinosaurs and the earth only 6,000 years old when you saying it was? Yeah, I ain't trying to go there, but y'all get my point. It's just stuff to make you say, you can't have both, bro. You can't, which is it? So I say this again to say this: when it comes to looking at these assets like these financial vehicles, especially like the Tesla here, and again, given that the fact that we already know that we headed towards some kind of a downturn, right? We're already in it, right? It's already happening. It ain't nothing new. Again, you don't get these kind of falls in companies that have this kind of level of so-called brand recognition unless there's something going on here, right? This is bigger than politics. Again, you can line it up with the SPY. It's the same thing, right? It's the same thing, right? Well, let's go to that's the weekly chart, but the daily shows it in a more egregious way, right? It's the same thing. This ain't all politics, right? So again, let's go to the one thing that's been carrying everybody. All these charts look similar. Notice that, right? At least the big money one. I mean, I know I'm preaching to the choir with this. Ain't nothing that y'all don't know about. Again, I know it.
I'm a bail out, fellas. I'm a bail out, fellas. I just want to say in Elliott wave theory, this big decline is just a wave 4. There's a wave 5 going to a higher high. And what I'm saying we should hit this bottom this week. If not tomorrow. And if I'm wrong and totally, crazy, you'll know it because the price will have kept falling. But otherwise, you should see it start to recover real quick. It's the next count once we make this exceed the current high on screen. Once we complete this next 5 wave count, which will take us above that, maybe it'll take a year, something like that, a year and a half. But that's when you're going to hear a lot of hell trade being spoken, because a lot of the technical people are going to be coming forward saying, okay, and we especially going to be paying attention to the momentum oscillators, because one of the tells is if this is like the end, like a big wave 5, a big correction coming, the momentum won't return, so it will go divergent.
It's either got to find some new buyers or we going lower.
Well, right? the big money won't buy into this aggressively into this next rise, but we will. So the price goes ballistic, but the momentum goes the opposite direction. And if we see that happening for a long period of time, that's the tell that this final count or wave structure is it. This is the last one, and hell comes after that. And so we talk about this is something you'll see, or we should be able to see on the monthly and weekly charts, bigger time frames like that. So we're going to be paying attention to the momentum. But this bottom is again on the Nasdaq futures chart. All eyes should watch the August 2024 low. We should exceed that and then quickly turn for a hard recovery to start that new 5 wave count. So next week, we should be all happy talk about, wow, did you see that ricochet, off the bottom? Wow. And, basically the markets, this bull run is the greatest or strongest bull run in the history of markets. We've never known anything like it. This is all a part of the wave structure that started with the end of the Great Depression. So there's a 5 wave count that started back then. We're in wave 5 of that. So the good news is we likely got more to go. The bad news is we're being the eagle is taking us to a higher cliff to drop us from.
Yeah, again, because we were already kind of perched up there, as it was. And again, y'all know how linear values look like in terms of, again, getting outside of its comfort zone. We We're getting well past indicators and moving averages. Again, y'all know the old school commentaries that what? Moving averages act like what? Magnets. And the further you separate yourself from it, the more they're gonna pull you back down to it, because that's that equilibrium aspect of what they call a liquidity, landing zone, if you will, right? Another way to look at it. It's a liquidity landing zone where it says, hey, you need to come back and get refueled, right? Because at some point you're gonna tap out, right? And again, for the market, greed theory is that what you rather crash out at the top than at the bottom, right? Right? Nobody ever went broke taking profit.
And I don't know what that retrace is on a Fibonacci tool, but wave 4 is probably the most consistent of all the 5 waves in the 5 wave count. Wave 4 is typically a 38% retrace. Right. So from that low, where that last swing started, you see in the middle of the screen, that low, I think that would be like October. Would that be October 2022? Is that where that low is, right there where you touching? Is
right
that,
here?
Yeah, that October 2022-ish.
April. This is April, May of 2022 here. Because that's when
okay,
we
so that's there
around.
Now.
Yeah, and this is on Netflix, of course, because Netflix is going through a whole lot of things. It's still an individual aspect as opposed to the the broader ETFs. It kind of went through its rebirth, but it's all of them are kind of.
So if you put a fib from that low up to the high, put the 0 point at the bottom and the 100% line at the high, the Fibonacci the retrace tool, you can use that one. That'll work. Fibonacci retrace tool.
Yeah.
Just put the 0 at the bottom and the 100% line at the top, and I'll show you. This is what the Elliott wave theory people are looking at. We're looking at the so that's the 100% line at the top.
I gotta flip it.
Okay, even if you keep it like that, it's the same math.
And I'm just doing it because
you keep it like that. Keep it like that.
Yep.
So we're looking at the 38% is what we're looking at. So that would be the 382 on that scale. So we're looking for that. So we're a long way from that. And we're not on long scale.
Yeah, we are 380. Got you right around about that 680.
Well, that ain't enough of a retrace.
And that just close to, because it makes sense, because that's what you had a point of resistance, become new support off in this regard here, because that's when it kind of perked out before it dove last time. That's why I had all the consolidation here before it broke out from that area there. So that's just what they call muscle memory.
That ain't no that thing is just really getting started. If it it's nowhere. But the Nasdaq looks far worse. It looks hellacious.
Right.
Yeah. Right. it's closer to the 38% retrace than Tesla.
And it's just kind of giving that the semblance of what we talked about with Tesla, because again, all these stocks kind of have that same kind of correlation. They hadn't really kind of broke away from that aspect of feeding off, everybody kind of feed off the same dollars, like that dollar being passed around through the neighborhood 5 or 6 times, 7, 8, 10 times before it leave the neighborhood. Well, that's what the tech sector been doing, right? We know that's the Mag 7 been using that kind of same business model within that, because what were they doing? They was buying from each other. So essentially, for the most part, at least from the video, the NVIDIA was the crack house. Everybody went to NVIDIA to kind of upgrade their infrastructure, right? They need them chips. And so everybody been feeding off that, and then they've been innovating with it, and then they've been getting their kind of their economic boost in the back end, and then all the kind of wayside kind of participants that kind of fed off the crumbs, they kind of came around on the underlings and kind of swept the crumbs, and the quantum computer types, which they just got they ship rock, because the video came out and kind of pretty much said we don't need it. Right, we're going to another level now. It dethroned a lot of their kind of their innovation, but like anything, again, that's the efficiency of markets. Again, there's always going to be somebody out there that's coming with another way to realign the market in a way. Again, just crazy, because look at Microsoft definitely been getting hit too, like Tesla in a lot of ways, but it's kind of really been lagging. Look at the cycle on this monthly on the linear regression band. It's kind of playing those levels of pivots really hard. Now you back at another pivot here. It's at a barbecue or mildew moment here. Put up or shut up. If it come down to test this 360 level here, 367 area, and don't consolidate or get some distribution here, then yeah, we are at a pivotal point here. And this is, again, I said again, this is good, right? This is good. accept it, be excited for it. At all aspects of this market, it's going to have to go through its, these checks and balances. Let it happen. If you're going to be able to get this thing cheaper, it's going to let it happen. Again, you got Amazon, they got news today. They kind of kicked off something. Everybody, they just holding these press releases for the right time. They knew the market was going to be tore up today, so they dropping their press releases today. Y'all know this old market tricks. But ultimately, at the end of the day, it's still going to be based upon what? The broader market, money flow value, in terms of if they're going to get these kind of global players to get excited about, keeping, us in the, as the cleaner shirt in the dirty laundry basket, and keep their money flowing into, number one, they're going to have to kind of figure a way to get a handle on the bond market, right? The TLT is under a lot of pressure, and rightfully so, because again, we've been riding these high valuations for so long anyway, on all this kind of, adverse risk, on the back of, coming in with a new administration and all this tariff talk like that. At some point, something's going to have to give. And this just awakening of that. That's why you got the 10-year yield kind of pulling back too, along with everything else. Because you would think the 10-year yield should be kind of getting feet underneath and rising, with tech coming down, with the level of inflation going back up, right? 10-year yield actually feeds off that. But then you have the kind of scenario where it's pulling back along with the S&P 500 or the tech sector, if you will. That means something is broken, right? It ain't hard. You got to overthink this stuff. Something is broken,
right?
In this regard, and it's going to have to work its way out through some form of fashion. So that's all it is. Just the efficiency of the marketplace is going to have its cracks, its chinks in the armor, which has always been, because it's been manufacturally propped for quite a while with all the bond issues that we got from Janet Yellen. She was doing a lot of Wizard of Oz tinkering behind the scenes, making Biden look good, when ultimately today we know he was a paper soldier, right? He was just a paper soldier. Ultimately, it reminds me of the movie 300. Y'all remember the second version?
Yeah.
The second version was with old girl. She was Xerxes' right hand woman.
Yep.
She was going out chopping the heads off of all them kings and bringing them back to her. And it got to the point where they brought the thunder to their doorstep. She said, "You only exist or survive because I make it comfortable for you to have this, this kingdom, so to speak."
Yep.
That's all it is. What's happening right now. Janet Yellen was that woman.
Yep.
For Biden. And now all that money coming due, and you can't account for it, right? Again, it was a manufactured GDP, manufactured jobs. They lied about all that, and they were backdooring that money. That money can't even be accounted for. You got 5 failed audits in DOD. Again, y'all know what it is. So this mandate that you're getting from Trump, and I got to get out of here because I got to get up in the morning to have stuff. But I say this again in closing, just kind of giving what we've dealt with before with Trump, these tariffs, all this stuff that, that got people kind of up in their tizzy right now. Again, ain't nothing new, right? It ain't nothing new in the sun that it hasn't happened before. It just feels different now because we're under a different, again, cycle, if you will, in terms of the market, because everybody been riding a sugar high for the last, 4 years, right? Actually, it was before that, because Trump really kicked it off, again, giving them credit. He had a crazy boom on the market before COVID hit, right? If COVID hit, y'all, man, that market, it was on fire. I was so mad because it was like, man, I want some better dip buys than couldn't. I was upset. I was still in some good positions.
Yeah.
But I was like, man, this ain't gonna never pull back. And then he started talking tariffs and all that stuff. We got those pullbacks. I said, oh, here we go. Now we got a chance. We're gonna get a chance. And then COVID happened. It's like, okay, that just dethroned it. But for a good point, the market was just running. And so that's all it is, guys. We just in a point, like Dollar Bill was saying, these cycles are important to realize that. So don't fret. Get excited for the idea that you get a chance to buy. Buy a little bit lower now. 401ks may feel like they kind of going through a strain now, but guess what? They've been riding the sugar. Especially if you had one for quite a while. You've been riding sugar out for quite a while now, right? It just seems like you losing value that you ain't locked in now because it's going through a cycle. It's going through its sine wave cycle at this point. But like anything, again, they're gonna figure this stuff out. The market, that is, and if this is to be the catalyst that really burst the bubble, and I say really actually burst the bubble, because we had that before with inflation. They figured out a way to kind of make that go away. I don't know how, because inflation is one of those things where you can't put that genie back in the bottle once it's out, right? That's why Milton Friedman was very, very, he was very, very, strict in saying, then monetary phenomenon turned what we know as the inflation. Once that genie gets out the bottle, you're in trouble, unless you have a very efficient government and productivity coming from your citizenry. That's the only way you really kind of quell that. That's why it took Paul Volcker so long to get it under control when he went through under Jimmy Carter. And the market was fighting him tooth and nail every day, doubting him, because they wanted the sugar high to keep the stock market running. But guess what? Ain't that the same thing you're getting right now?
Yep.
The same thing happening right now with Jerome Powell. He just blew a bigger bubble under his mandate because these people have gotten beside themselves. They figured out a way to now become, in their mind, the new, if you will, the deaf, but as they call them, they the last resort, bank, if you will, right, of everything. They're the Band-Aid, the bullets and the bandages, essentially. But that has come to an end to a degree, because you're going to need productivity to kind of really present itself again. If America is to kind of really get back to this so-called golden age that Trump wants, they're going to have to really get government out the way. And you know how hard to turn around a big, giant moving ship when it's at full throttle and the wind at its sail? And you're talking about pivoting on the dial like a Barry Sanders. No, It don't work that way, right? You trying to get in front of a running elephant at top speed, talking about something. No, I'm good. You sitting there with your little pads on, your little helmet on, your knees shot, shaking. You're gonna get ran through. That's what the market going through right now, right? It's trying to take all this momentum, and it's been now curtailed because of this whole inflation erosion, now tariffs, this idea of reshoring, these companies. And again, but these people play the long game. They're going to make a lot of promises like they did the first time. Well, at least China was doing it. And they're going to try to wait him out. If they like, if it get too bad where they can't kind of window dress the market, they're going to try to wait Trump out. Hope the next regime comes in and take things back to the way they were. Because to be honest, again, I say I'm getting close, but I got to go. American market's been on a fool's gold run for quite a while now, post great financial crisis. It's been a lot of paper gains, paper passovers, and it's been a fake environment in terms of real organic growth.
Yep.
Stretched valuation, a lot of woulda, coulda, shoulda, a lot of, hey, given the benefit of the doubt, no one checks and balances were not really there. It's just been a wild, wild west. It's been that. We're at a point now, it's like you got to put up or shut up. Well, guess what? China actually been doing it. That's why we so hard. Again, as the saying goes, the crook in the room when he the loudest. China been quiet. America been the loudest person in the club.
Yep. That's true.
People don't want to deal, they want to, again, throw shade. Again, if you're a market, bipartisan minded person, you realize liquidity is liquidity. You want to go where the money popping, or where the opportunity is popping. Yeah, we just got a really well, oil printer that we rely on a lot. And we're passing on the future debt of our drunken sailor, gambling today to people who ain't gonna be ready to be able to handle it. That's why millennials are getting kicked in the teeth and can't buy houses and can't afford to live in this boomers utopia, because they sitting on all the gains over the last 40, 50, 60 years. And they ain't willing to relinquish it or take a haircut to help the future generation. This is greed overload. These people going into the grave with all this stolen valor. Some of it is honorable because they came through an era where they did industrial revolution, but if you a good fiduciary, progenitor for your future generation to really grow, a lot of that seed investment they should be doing to really help the future generation, they would have been doing that 20, 30 years ago. These people are greedy. Look at the Nancy Pelosi's, them type. These people are greedy.
Sure are.
They sitting on all this. Again, you couldn't make this stuff up. Again, I know people like, well, man, you can't, hate on money. Like, that's not hating on money. That's realizing that you're gonna have to hold their bags when they leave. That's the only way. That's the best way to look at it. You're gonna have to hold their bags when they check out. And you still got to provide a future for yourself and your kids.
Mm-hmm.
That's a big.
Tough.
I'm sorry.
I was just saying that's tough.
Yeah, and so again, the only thing you got, if you ain't, procuring businesses and innovating and figuring out the ways to kind of, get income coming in, at least at that level, having multiple irons in the fire, some kind of way to bring income in. You can't, again, be the person who's rely on a job alone and that alone. You got to find other ways to get income coming in to be able to compete with the level of inflation that's going to be sedentary for quite a while now, and the cost of living that's going to erode your wealth as well.
Yeah.
Because as the saying goes, once the price, increases out the bag, rather do they go back down. The only thing that really have that level of, equitable volatility is energy prices, oil, right? Because you can, pump more and bring the price down, which helps you overall. But most times the price of these goods and services kind of stay elevated, again, you got to be able to have earnings power to equip you to be able to handle those shocks in the market. This is just another shock. Right? But you've already been beaten down by inflation, which is a hidden tax. You've got to find ways to kind of stay above water, or find ways to have income coming in or interest accrued to your money. Right. So again, just y'all know what I'm talking about. I know I preach the choir, but I'm gonna get out of here, guys. So again, tariffs just another playbook we've seen before. It just feels like it's much more magnified now because of why. The idea that at this point in the game, we're sitting at all-time high in the market. We've been riding this latest wave in a way where we feel like, this kind of disrupt that. People who came in late in the cycle want to benefit and thrust the market a little bit higher based upon all this, projected potential growth that was already being, mapped out and it's been beat up by DeepSeek now Trump. It's just a good reset moment. We've dodged a recession now, at least for the last 8-9 years minimum, right? Again, COVID was one that was a one-off, that didn't really count. So it's time for it to happen. Now, whether it happens or not, but this soft landing that they're trying to push, look, they're gonna have to prove it to me. They're gonna have to prove that with me. This soft landing is that's some real Goldilocks stuff, and it's based on a lot of, again, paper gains, spurned, by, again, the government, right? They just pretty much been carrying this torch and torch alone, because American citizens ain't benefiting from it. I mean, ultimately, in aggregate, it just people who well-to-do been doing pretty well. I mean, asset owners. All right, so that's just not a healthy economy. But anyway, but that's all I got, guys. I ran myself dry a little bit. I got to get up here and get me some dinner, get a shower in. I was out in the water fishing, like I said. I took the time to man, let's go meet with the family and talk about this stuff, because I know people waiting on this day. They even make this mark my word, this man might try to make this a calendar holiday for real too, because he out there doing a lot of crazy stuff. He already called it Liberation Day. Don't be surprised if next year they're gonna put this on the calendar, or may try. Right? So henceforth, April 2nd gonna be Liberation Day. Right after April Fool Day, you're gonna have Liberation Day. And people may feel some kind of way about it. The market don't rebound. Hey, man, I ain't gonna celebrate that goofiness. It drained me. But anyway, guys, so that's it, guys. I'm out. Y'all got any last word, man? We close this thing on out.
Always, man. Thanks for coming on, sharing your wisdom and knowledge with us.
I appreciate you guys, man. And yeah, I missed the gang and doing that the level we used to on at least on a fluid level. Just again, a lot of stuff going on like everything else too. So just keep finding that time to kind of still come back to the table, because a lot of this stuff, again, we've already discussed it. We should be good enough to at least deal with it at face value, right? There's a lot of stuff that may be happening behind the scenes, but it's again, it goes back to, again, follow the money. What does the money tell you? Where's the big money? What is big money doing, if you will? And kind of stand within our own individual lanes. That's what's going to basically carry you through this whole cycle here. And it's a good thing. Again, if the market's pulling back, it needs to take a breather, if you will. So I'm not worried one bit. And I know you guys really aren't at the end of the day. Again, never run from a good dip by opportunity. I know that much. That's it. So yeah. Any last word over, Chris? You guys done? Thank y'all again for coming in on the back chat as well, guys. Appreciate you guys as well.
Sure, Over. Thanks for coming on, man. Appreciate that.
Yeah, anytime, man. Anytime. So again, I miss these moments of getting down, but we'll get back in. We'll get back to it. Because I think, and at least given where if we're any bit, I should say, confident in understanding when we see these type of things, what the next, order of business is, I think we'll be fine, because we've seen this before in a lot of ways. And this is the moment where you should be really starting to do the Birdman hand rub and get excited for this. Because again, we're talking about dollar cost averaging. We're talking about letting the market kind of reset a little bit. Again, no one wants to go through the degradation of what a recession may feel like in terms of the Main Street life. But at least from an investor's perspective, if you can find the income, start putting it away for that moment, to do you some real good dip buy, right? So welcome that, get excited for it, and we'll be fine. Let the bureaucrats be bureaucrats, let them fight it out. They already got their own civil war going on right now, right? With all this thievery that's happening in DC. It's crazy. I can assure you guys, it's crazy in DC right now. Like this, it's like the cat. Look, it's crazy. It's real. It's a lot of shakeup going on right now on the social level, on the economic level, and the political level. Right? They just tore up the Black Lives Matter mural. They destroying all the LGBTQ businesses that just overran all downtown DC. It's crazy here, guys. It's straight pandemonium. And all the people that were eating off that US aid money, they done packed up and left. Can't make this stuff up. It's crazy. All the the people that were grifting and eating good off that there, they done packed up and left DC. Because that well then ran dry. They gone. They leaving. How's the market here? How's it going on the market every day in DC? In major numbers. People are just packed up and leaving. That's before you even talk about the government workers, those who are just leaving out too, right? Because again, the firing and all the other stuff that's going on for that ordeal. So, hey, I don't know if it's good, bad. Look, I'm just sitting back waiting. Hey, whatever happens, I'm sitting back waiting. All right, so that's it, guys. So that's all I got, guys. I hope y'all guys enjoyed the bill, man. Again, y'all know how to go pull this data up about the tariff stuff. Just, I'll post this in the back chat of YouTube. Again, just, if you're new to the idea of what tariffs is and want to get a crash course, they got a lot of historical references that you can go pull up about this stuff. There's just an article, dealing with, how, tariffs been used throughout history and why Trump is different, as some would say in this particular article here. Just, it's a negotiating tool, but it's a way where, again, America has really been carrying the water for a lot of people. Some people say rightfully so, because they owe a lot of people for what they've done to them in their countries. So a lot of people got mixed feelings about it. But all I know is, as an investor and a citizen in this country, just kind of given the track that we were on, what we were doing was just very highly unsustainable. So maybe this kind of brings it into perspective in terms of our trading partners and also how we've been doing business in this country, because we were just writing checks to any and everybody with no oversight. Like, this is crazy what was happening, at some point where we kind of had to throw a monkey wrench into that, the machine, and slow all this mess down, because we were just on an unsustainable path. We've been through this, and maybe something needed to happen to this magnitude to slow everything down and get the smart people to kind of come forward and try to really fix this. All right, so we'll see. I don't know. But that's it, guys. So that's all I got, man. So hope we'll get a chance to do this again real shortly, guys. Hope y'all got something out of it. I know it was kind of, all over the place in the beginning. But again, everything is a moment to kind of learn from it. So shout out to our brother Aaron that was on earlier, wherever you're welcome back, brother. Yeah, just understanding, how we roll. We want to be respectful of people's ability to grow and learn. But, again, also just, be understand that there's always going to be another side of the coin too, where you got to, be around other people who have already understand about stuff too. So you can always gain something from a good conversation. So, but that's it, guys. Thank you, Oba Chris, as always. Thank you, Oba Brandon, everybody that came through on the back chat.
For sure.
Hope y'all got some out of it as well. Again, I know I had a plan to go down through a lot of articles and stuff, but y'all know that when we get to talking, we get to having conversation. That's all that is.
It's all good.
It
happens all the time. It
happens all the time, man. You have a plan, then sometimes it's okay to deviate. It's okay. We still got some out of it. That's all that matters. So I'm excited.
If you ain't, I'm gonna try to call you tomorrow, because I was gonna plan a trip to come up there and visit you, man. And I was trying to get Brandon and Mo to come too. So
oh man, y'all, hey, it's well.
Try to see what's going on,
and again, I kind of off the record, I'll tell you, I got some good dates coming up here shortly, especially in July, because we got a promotion going on.
Yeah.
For the other half, so that's big and a lot of stuff going on. But yeah, man, y'all know how it is. I always tell people, you come anywhere near this little area here, fly a kite. I got you.
All right. So
I work from home anyway, so
yeah, right on.
So it's good, man. Hit me up. It's all good. It's all gravy.
All right, bet.
All right, awesome, man. Appreciate you guys on YouTube again. Thank you, everybody might have tuned in and came through and kind of got some out of the bill today, and everything that all things tariffs, nothing to be alarmed about. Look at it as an opportunity to kind of resubmit yourself in the books and understanding how to use this to your advantage. That's all it is. It's a good learning moment. All right, so that's it, guys. So I'll catch y'all guys on the next one. Again, appreciate everybody, and we'll see y'all on the next one.
Peace, power, and profit.